All right, welcome everybody. Sorry for the momentary delay there. We were trying to get everything up and streamed. It looks like we are good to go. You can see me, you can hear me. By the way, please feel free to chat in where you're joining us from today. I'm going to get through a couple of informal aspects of today's kind of live trading webcast here. And then we'll get into some very much some specifics regarding some of the trades we're going to be covering today. First and foremost, throughout the course of today, one of the first questions that I always get, is this live? Yes, it's live. So to show you how live, we'll be glancing at the markets throughout the course of today. It's a wild trading session thus far. If you just open to the screen this second, the S&Ps are and the NASDAQ are massively unchanged. They've been up 100, they've been down 100, they are unchanged right now. So we are all over the place, and I like it, people. This is the kind of volatility that we live for in terms of trading. So again, we are live. That's number one. Number two, you can ask questions throughout the course of today's session. So I am looking at the question and answer both here on my iPad, and I'm actually watching the chat room. So feel free, chat in. Without further ado, let's get started. And again, I want you guys to know, not only can you chat in, I'm reading it. I'll answer your questions. By the way, if you see me look away over here, I'm broadcasting this screen. I am watching this screen, and of course watching this screen because I've got some trade activity going on, and watching your Q&A on my third screen over here. So yeah, we're stacked, we're ready to roll here. With that, let's go ahead and get started today with this. Ultimate Trades, high probability income generator. Again, my name is Don Kaufman, and you are watching a Theo Trade presentation. Initially, we threw up a risk disclosure. We're not financial advisors nor a broker dealer. I spent quite a while in the brokerage side of the business, so I always like to throw this up here because today we're actually going to do some live trades, and you're going to use, I'm going to use a number of different brokerage firms throughout the course of today, but I'm no longer employed by any of those brokerage firms. I'll discuss my background here momentarily. Let's get right down to business. First and foremost, I'm going to let everybody know I have a tremendous amount to discuss throughout the course of today. I'm probably going to be 90 minutes, 2 hours. I hope that's all right with everybody, because I'm going to go at a fairly good clip. I'm always adding more. Like Ultima Trades has just been ideal for this marketplace environment. And that's actually given me more fuel to add to today's presentation. You guys are going to learn a tremendous amount. I hope that's all right with you, because again, I only like to eat up time as long as you're going to be learning something throughout the course of the session. With that, this is why you're here today, and this is specifically what I'm going to talk about. So we are going to discover what Ultimate Trades kind of means. And people, ultimate, no, it's not ultimate, it's Ultima, which I'll talk about here momentarily, and that they are absolutely ideal for the current market environment. The more volatility, the better. So you can potentially generate monthly income. The second aspect of here, you're going to learn a trading symbol. In fact, you're going to learn this momentarily, that professionals use on a daily basis to be able to create these ultimate trades. You're also going to learn how and where you can find edge as a retail trader. So something I think it's probably one of the most overused terms, like edge in the marketplace. We're going to define what that edge happens to be. And, you're sitting at home all by your lonesome on your Pentium computer. Where's your edge as a retail trader? Have you been told this? Can you define where the edge is? And that's exactly what I'm going to show you. We're going to talk about high probability trades, and more appropriately, how to reap some of the benefits of high probability trades while actually mitigating a lot of the back end exposure. And of course, last but not least, we're going to talk about what products to trade. By the way, the word product, stocks, options, futures, I don't care what you trade, crypto, it's all the same animal. In the end, you can buy it, you can sell it, right? So we're going to actually look at what makes a viable candidate. Like, what am I actually going to be trading? Why am I trading these particular symbols or products, if you will? And again, I'll get into quite some detail regarding that. Before I go too far, I want to actually provide to you, each and every one of you can receive a copy of this. It is our auto expected move indicator. Okay. Bar none, hands down, it is the indicator that I use more than any other indicator. In fact, more than every other indicator combined. I use the expected move indicator incessantly. If you've ever tuned in some of the YouTube videos we do, okay, I'm always talking about expected move. And as such, I feel that each and every one of you should have a copy of this. It's a $500 value. You stay with me right until the end of this webcast, and we will provide a link to you, okay, specifically so you can obtain the expected move indicator. Okay, stay with me right to the end of the webcast. And we do that as a gift to obviously, entice you to stay throughout the course of the entire webcast here. Believe me, you want to spend the time here today. Not only are you going to learn during the webcast, but the auto expected move indicator is well worth it. In fact, I always show these screenshots and then I get frustrated immediately. There's a reason I like to do this during the trading session. Okay, I don't like doing webcasts at all at night anymore. Forget it. Okay. A lot of people are working from home, but I say, forget it. Okay. This is dynamic. This is a marketplace that's open. This is what matters right now. If you look at the XLF, which is, the financials, and we apply auto expected moves, check out right now when I apply the auto expected moves. Do you know that the financials are actually cracking below their expected move? And you go, I don't even know what an expected move is, but I'm excited about it, right? The expected move is what the options marketplace depicts risk to be moving forward. So you have all these indicators. You got a MACD, you got a Fibonacci, you got a Bollinger Bands, you got your Elliott wave over there. I'm in a type 4. Okay. Anyway, this is not based on any backward data like a MACD or a simple moving average. This is actually based on option pricing moving forward. Okay. So the option market makes a market for the next week, for 3 weeks out, for 2 months out. We're using those option marketplaces to decipher how far the XLF can move within a given period of time. And right now it's at a breach. And you're like, that's kind of interesting. Yeah. Find it even more interesting when you look at the S&Ps. Okay. The S&Ps right now, they are on it. We are right ready to breach the lower edge, which means, okay, that's when things get crazy in a marketplace. Anyway, that's what the expected move indicator can do for you. Stay with me again right to the end of the webcast. We'll provide you a link to the auto expected move indicator, a $500 value. All right, a few housekeeping items. Listen, this is skill set. I'm going to run through a tremendous amount. As I already kind of alluded to you, I'm definitely going to go over an hour today and more like 90 minutes to 2 hours. And I let everybody know that up front. I don't want you guys to be disappointed. He's going a little bit longer than we thought. It's because I just keep adding more and more to this presentation. Like Ultimate Trades is something we've really done, okay, since the onset of the pandemic. Volatility spiked. We'll show you that in a moment, okay? And there's so much going on right now, okay, in terms of the environment, and this being like this just ideal environment, okay, for Ultima. Anyway, shut the door, turn off Skype chat, whatever else is distracting you, get rid of Facebook. You don't even have to close Facebook, just get rid of it completely. Phones on silent mode, definitely kick out the kids if you have any. You took the time to be here today. Focus on being here. It's, I think, again, you guys are going to learn a huge amount. Now, here's a little bit about me. I don't do a great, biography on myself. So I get why a lot of people come, today to learn about Ultimate Trades, but I'm going to give you a little background about what brought me here. And in very large part, I watched order flow for 15 years, and it kind of provided me a really deep and very insightful skill set. And it's in large part why I'm here. And a lot of people, by the way, have no clue what the terminology of order flow even means. So give you a little insight and kind of my background, because some of you guys are brand new, have no idea what a Don Kaufman even is. Okay, it's fine. Okay. I actually grew up around this business. I get that question all the time, like when did I learn to trade options, or how long have I been involved in this? I grew up around it. I mean, I had numerous family members that had traded in Chicago. My uncle actually built a trading firm back in the 70s called O'Connor and Associates. He eventually retired and sold it to the Swiss bank. in the 1990s. By the way, in 1992, when the deal was done, it's a multi-billion-dollar deal back in the early 90s. I mean, it was a massive, massive trading firm. I had cousins that traded on the floor, like, getting around the family Thanksgiving table was a little different for us because we'd always be talking about trading and so forth. So I grew up around it. Right out of college, I started working in Chicago. Only a short time after that, I was managing risk for a firm. I was actually invited, okay, only a short time after I got to Chicago, about 18 months after, I was approached by a couple of traders that I knew from the floor. And they said, hey, we're going to build this brokerage firm. It's called Thinkorswim. Come with us. So I went to work for Thinkorswim in roughly 2001, early 2001. There was just a huge crash in the marketplace. The NASDAQ was imploding. It was like this horrible time to start a tech company, but at the same time, it was the greatest time because we were, buying the bottom of the entire marketplace with the tech company. But I went on to actually build the education division of Thinkorswim. I worked a tremendous amount, if you've ever been on Thinkorswim, on everything from charts to scanning to a lot of the option analytics on Thinkorswim. It's a lot of my background. So I was on the executive team of Thinkorswim when we took the company public in 2007. I then went on to be acquired, of course, by none other than TD Ameritrade. And I actually ran education of TD Ameritrade from roughly 2010 to my exit in 2015. Everybody always asks the question as well, why did I leave? Okay, I had a 5-year lockup clause. So when Thinkorswim was bought by TD Ameritrade, they said, 5 years, give me the best 5 years of your life. And I said, done. So they put the golden handcuffs on. I spent 5 years, probably the most insightful 5 years of my entire career, because what I got to do during that 5 years is not just run education. I got to see everything that you were doing. For the better part of 15 years, I studied retail order flow. And order flow it's your trades. And everybody always asks, what does that mean? It's your trades. I got to see everything you were doing, everything you were doing. If you said, I've done iron condors, I could tell you right off the bat the probability of profitability on any strategy. We would actually look at stuff and say like, hey, this person sells covered calls. Do they make money? And instead of looking at one person's account, okay, we had like actuaries at TD Ameritrade that could look at subsections, for instance, of like 200,000 accounts. At the time I was at TD Ameritrade, we had 7 million brokerage accounts. You can learn a lot from 7 million brokerage accounts, but most importantly, I know exactly what works and what does not work, specifically for retail traders. And that's exactly what I'm going to be talking about today. So what you're going to learn here comes, okay, from our experience. And I say our, okay, here at TheoTrade, this is not, a one-trick pony. It's not Don Kaufman's show. We have 7 other full-time instructors, many of which come from hedge fund backgrounds, brokerage backgrounds, market making backgrounds. So it's a little background, obviously, on TheoTrade and myself, but what you learn here today comes from watching billions in others' mistakes, but more importantly and more appropriately, what works best for retail traders. By the way, if you ever need to get a hold of me after today, support at theotrade.com. I put a big emphasis on this. We have no problem answering emails. We answer hundreds of emails every single day. Just put my name. We use a common inbox, put my name right in the subject over there, say, for Don Kaufman, and it will definitely get to me. So support at theotrade.com. Do a couple of media appearances. I actually just did one here. Excuse me. Less than about 45 minutes ago, I just got off TD Ameritrade TV. So I still do some CNBC appearances from time to time. This is myself pitted against none other than Kevin O'Leary, a couple of other news networks that I'm also working with presently. Let's get down to business. What are Ultima trades? Every time everybody hears about Ultima, they think it's ultimate. It has nothing to do with that. What Ultima is, it has to do with volatility of the volatility of the volatility. And you go, I don't even know what that means. Okay, listen, markets in general. Let's start with this. Markets in general. And by the way, I'm reading reading kind of the chat off to the side over there, but I like it. Guys are killing me with some of the questions already. Anyway, markets in general, since the onset of the pandemic, have had considerably more volatility. Now, there's a lot of different ways you can look at volatility, and I think the most effective way to probably look at volatility, everybody's kind of familiar with VIX. Okay, so let's go VIX. Let's go VIX. If you take a look at VIX, and we're actually going to go ahead and open up. So let's get crazy. Let's open up a 5-year chart today. Okay, feeling a little crazy. So we open up a 5-year chart. I'm just going to put my mouse on it right now. We're in the 22 handle. Okay. But do you see anything? Since the onset of the pandemic, obviously volatility has been considerably higher. And again, everybody can kind of agree with that. But that's not what Ultima Trades is about, right? So higher volatility, it has resulted in more options premium. Now, I said options. Don't freak out on me right now, but I said options. How many of you have had some experience with options? It's early. It's early to be mentioning this, but how many people here have actually traded some options before? By the way, you can just type in me, your yes. Okay. All right. If anybody has had none, just type in none. I'm trying to get a feel. There's a lot of you guys on right now. There's a lot of people on right now. And we're broadcasting into a multitude of different venues here. So we have almost 1,000 people scattered between like YouTube and Zoom and a couple of other venues we're broadcasting into. So if you have no experience here, it's okay. It is okay. You're okay to go, and it's fine. But just understand some of the bigger concepts. Okay, higher volatility, okay, makes options, okay, juicier, higher price. Option implied volatility skew is also historically high levels, and the volatility remains at records highs, which is Ultima. So when we say Ultima, what Ultima really is, it has to do with the volatility of the volatility of the volatility. I can't even make that up. If you look at volatility, it's called Vega. Okay, so there's Vega, then there's what they term VAMA, and then there's what they term Ultima. Ultima is actually how we're making money. You go, I don't get it. You shouldn't yet. It has a lot to do with skew. So let's actually bring up skew, okay? We think of skew as a normal distribution curve, right? Right? Well, that looks like a normal distribution curve, okay? And then we're going to bring skew into play here. Let's see if we could just draw this up really quick. So this is your normal distribution curve, and I'll go ahead and even change the color, make it a little easier. So that's your normal distribution curve. Here is skew. Right? So what is skew? It is literally distortions in pricing. Okay. Each and every one of you can pull this symbol up. It's actually called SKEW. So S is in Sam, K is in kick, E is in echo, W. So bring up skew. Skew, since the onset of the pandemic, has been record high levels. You know, ironically, I mentioned this, but ironically, last night it actually closed relatively low, which is a really, really interesting thing. It like opens up the trap door to the downside of the marketplace. But that's for a different conversation. Skew, since the onset of the pandemic, has been flying. I mean, like down here has been like low skew. Look at what's going on right now. I mean, this is a history pretty much since the onset of Skew. Skew only was started recording. They only started recording it in 2011. And the current environment has been the highest Skew ever recorded. Okay. So what is so important about Skew? Okay. Well, Skew provides a significant advantage. Skew provides edge in the sale of out of the money option premium, because I want to put it in kind of brass tacks. Like I want to put it in definitive language that you guys understand what we're looking at, why we're even bother looking at it. Okay. How can we use skew? You're going to learn much more about this, but I like to present it right up front. Skew provides edge in the sale of out of the money options. Again, I said the O word. We are going to talk about options. Don't panic on me yet though, because if you have no experience, all I want you to do is pick up some big terms. Okay. Some big broad strokes of trade logic. Like, you know, I'm going to paint big broad strokes of trade logic. And then I'm also going to go, for those of you that are a little bit more advanced, okay, and those of you actually have had options experience, then I'm going to go get down into the weeds a little bit. So this presentation, I've kind of geared it at two different levels. You know, if you're a complete newbie, you're okay. Okay. If you're fairly extreme into this business, you're okay too, because I'm actually going to show you exactly what I do. I'm going to show you my trades. Okay. This is, it's full Monty today. You don't want to see that. Okay. Full Monty on here. Oh yeah. Now there's comments inside of the chat, of course. All right. Onward and upward here. So as I kind of dig into this a little bit, all right, what you have to understand is, so why is Skew so big right now? And it has a lot to do, and there's a little bit of a story behind this, but has a lot to do with the onset of the pandemic. At the onset of the pandemic, okay, more brokerage accounts opened than in the history of like years before that. What I'm basically saying is March of 2020 hits, everybody gets locked down. They're like, lock them down. April of 2020, more accounts opened in 1 month than had opened in the previous entire year. In fact, specifically at like a firm like Robinhood, they opened up more accounts in 1 month than they had almost, okay, in all of their years combined. They basically like tripled the size of their business almost overnight at Robinhood from the onset of the pandemic. All of these new people were coming into the marketplace in early 2020 with the onset of the pandemic. And the reason they were doing it, okay, because they were learning to trade options. Most of them predominantly wanted to trade options, and they were buying calls, okay, in the kind of rebound of the marketplace. What's so crazy about this, though, is that almost every one of those accounts that opened was limited to being able to do what in options. Now, some of you that are new don't know this, but those of you that have experience do. When somebody initially opens up an options account at a place like Robinhood, they can only do what? Buy options. Okay, they can only buy options. And in effect, it tweaked pricing to be beneficial for premium sellers. And everybody kind of misses this. All they can do when they first come out and they go, here's my $2,000, go, what can I do? And they go, well, madame, you can buy calls, you can buy puts, but you can't do anything else. Okay, because at Robinhood, they kind of like put on like training wheels initially when you open up an account. Not all brokerage firms are like that. Most brokerage firms let you do whatever you want in terms of trades. Robinhood, though, it's a little bit more for the newbies, and there's nothing wrong with that. But this has made it really beneficial. This is what's causing skew. In fact, retail traders gone wild. Check this out. This happens to be, all right, from last Friday. By the way, yesterday we did 43 million, but this was from January 14th. It was from last Friday. We did 46.66 million option contracts. That is a sick number. It's just ridiculous. The average, okay, in 2022 has been about 41 million, but last year at this point in time, we're doing 44 million. So we're rocking, and it still continues to kind of pick up. It's unbelievable. By the way, just so you guys know, like I came from the brokerage side of the business in 2015 when I left TD Ameritrade. So we're just backing up about 7 years ago, almost to the day. 7 years ago, to do 20 million contracts in a day was unheard of. Okay, now what are we doing? 46 million. The highest I've ever seen is close to 60 million. Okay, it's incredible. Options are moving the marketplace, full stop on that one. Options move markets now, right? What we're going to talk about today, learning to sell options. Many have heard through the grapevine that selling options is the way to make money. How many people have actually heard that? Because I don't want to be alone in just saying, yes, selling options is the way to make money. You get involved in this business, and everybody starts the same way when they get involved in this business. You go, I went out and I learned to buy some calls. I got beaten up pretty bad. And then I went out and learned to use spreads. Okay. And then I went out and all of a sudden I started hearing about learning to sell options. Okay. And sooner or later, people come to that conclusion. But again, am I the only one that says that? How many people have heard that learning to sell options is a pretty effective way? You kind of hear it through the grapevine because there's not a tremendous number of retail clients presently selling options. There's just not, because you have millions and millions of accounts that have opened in the last 2 years, and some of the better stuff hasn't infiltrated yet to those clientele. Those clientele are still like, I'm gonna be the buy the dip man, buy the dip. Okay. In the last couple of weeks, the dip has bought you. Listen, if you've experimented with selling options, you know full well that there's risk. Today's session, okay, my intent, let's separate myths from real risks, the fact from the fiction. We're going to get deep into selling options premium. I'm going to show you exactly what works, why it works in the current environment, okay? And more appropriately, how you're going to manage the risk in this. Let's get to it. Don't panic. You can definitely do this. So again, for those of you that know nothing about options, okay, that's fine. It's okay for today's session. For starters, and I'm saying this again, for those of you that are brand new, look to grasp big concepts regarding probability and risk, okay? If you're brand new, look for concepts on probability and risk. If you're experienced, watch the little nuances, what I term criteria. What criteria is, it's the specifics. It's why I'm doing the trade, when I'm doing the trade, what expiration cycles, okay? The other aspect that just begs to be discussed here, okay? And we just have to talk about it because I think it's essential here, is that selling options premium can now be done in very small accounts under $5,000, okay? And in retirement accounts. Again, it's critical. If you have a $2,000 margin brokerage account, you can now sell options in $2,000 accounts. Not every brokerage firm allows you to do so, but I think it's essential to make mention of this early on because a lot of people, they're going to see what I'm doing and they're immediately going to balk and say, yeah, I can't do that, but you can. I want you to push aside what you think about margin because you got to get a little bit, more in depth in this business to understand you're never going to let, okay, a brokerage firm tell you what you can and can't do with your capital. So small accounts and IRA accounts can now sell options premium. Let's dive right in. There's a lot of different facets of selling premium. Some of you have heard this terminology before, selling premium. What does selling premium mean? It means selling options. But selling premium could be called selling premium. It could be called credit spreads. It'd be called, people talk about bull call spreads and bear call spreads and bull put spreads and bear put spreads. Like, listen, credit spreads, short call spreads, short put spreads, delta neutral. Delta neutral very often is associated with selling premium, selling naked. I'm out there and I'm loving every minute of it. Listen, selling naked, fine. Selling premium can be used to create both bullish and bearish positions. But for today, and generally speaking, it's construed as market neutral, right? So I wanted to cover that, but I'm going to talk about selling some premium today. I think you guys are going to learn a huge amount here, okay? Probability and profitability. So your trading is always going to be based on probability. Doesn't matter what you do, probability, probability, probability. I'm going to drive this home all day long. When I talk about probability, listen to me. I'm telling you right now, probability is not the end all be all. You can do trades all day long with a 90% probability. I get at least now 10 to 15 emails a day that still ask the question, and I'm being deadly serious with this. They ask me the question, okay, how often are you right? And I'm like, oh man, listen, it's 2022. You want to see how often I'm right? 95% of the time. But that doesn't necessarily mean you're going to make money. Can't stand that stuff. You want to be right 95% of the time, sell away out of the money option. That took you 2 seconds to figure out. Okay. Never let anybody tell you the probability of being right is how you're going to make money, because that crap it's 2022. Again, I cannot stress to you enough, right? This is not, 20 years ago when you didn't have technology at your fingertips. You got to know that probability alone does not make you profitable. I will show you what makes you profitable, that markets are a trade-off. Markets are always a series of trade-offs. Higher probability equals higher risk. You can be right 90% of the time, but you can still lose money. And there's both sides of this. So where can you find edge? Because that's what we need to really exploit and explore. Where can you find edge? That's what you're here for, okay? That's what you're here for. And that's exactly what we're about to show you. So with that, we're going to get into our first example. Things from here on out, we'll start to get a little deep. I'm going to start basic. For those of you that are, the newbies, okay? Who are the newbies, right? If you're a newbie, would you please step up? All newbies, please step up, okay? All right. What are you, new? It's okay. It's all right. Again, I try to gear this for both sides. Nobody ever wants to do that. Come on, people. Admitting it is the first step today if you're new. All right, so me, good. We at least have a couple people. We're going to look at a $50 stock. Now, we're going to look at a $50 stock. One of the first things I'm going to tell you, I do not own the stock. I don't want to own the stock. Okay, why? Because stock ties up a lot of money. And quite frankly, because stock ties up a lot of money, there's also inherently a lot of risk in it. Like, you should look at how much capital you're tying up, because capital that you're tying up very often helps you decipher how much risk that you have. So in this case, I'm going to go ahead and start. I'm going to write on your screen over here, but we have this $50 stock. And I'm actually going to go out there. And again, this stock can be anything you want. And by the way, every example I've ever given since the beginning of time, I call every stock my fictitious stock. Is not like ABC. Where's the fun in that? I call it stock. Okay. And stock is trading right at $50. Do I own the stock? No, we just went through that. I'm going to go out. Okay. And I'm going to trade an option. We're going to go out and we're going to, in this case, sell. Okay. A 60 call. And for that 60 call, we're going to collect exactly a $1 credit. Now that's an option. Now I'm going to put up here that that option is good for, let's say, 30 days, right? Options always have a time frame. Now, timeout, because there are a lot of you, okay? There are a lot of you that are Dallas Cowboys fan and they didn't call timeout fast enough because they didn't have any timeouts left at the end of the game. Push that aside for a second. Just got to turn that knife a little bit into the Dallas Cowboys fans from the other day. Anyway, I don't know how I worked that in here, but that was a good one. Anyway, we're going to talk about the time frame a little bit later. First, I want to give you guys a little insight to what a 60 call is. Okay. Now, again, we don't own stock. The stock happens to be trading at 50, but as I said, we don't own the stock. We don't want to own the stock because we believe that stock ties up a tremendous amount of capital, right? Going out and buying a $50 stock is also a very, very long-term proposition. Okay. It's a very long-term proposition. Yes, this is an energy drink. Okay. Why? Because I'm a heavily caffeinated individual this morning. Okay. I have 3 kids that are being homeschooled over here. Okay. That's part of a job. This is part of like whatever I trade. Okay. I have at least 5 or 6 screens going. You need to keep the caffeine flowing at all times. So I don't own stock and it's this $50 stock, but I'm going to go out and I'm going to sell a 60 call. But some of you have no idea what a call is. So let's just talk about what a 60 call is. In options, there can be buyers and there can be sellers. You as a trader can decide, do I want to be a buyer of a 60 call or do I want to be a seller of a 60 call? But let's talk about both sides of this. When you first get involved in the business, you go, me, I want to be a buyer. Okay. By the way, palms toward me, I'm a buyer. Okay. Palms towards you, I'm a seller. So I want to be a buyer of a 60 call. So let's talk about a 60 call. What does a 60 call give me the right to do? Calls give you the right, okay, to buy the stock at a particular price. We call that the strike price. What is this one? 60 call. So if I buy the 60 call, not sell, but if I buy the 60 call, I have the right to buy the stock at 60. Where's the stock currently trading for? 50. So how far does the stock have to go up? Well, it's got to go from 50 to 60 just to even get close to me. But getting to 60 is not going to do anything. I have the right to buy the stock at 60. Who wants the right to buy the stock at 60 when the stock is trading already at 60? Like, that's not going to do you any good, because if you're buying a 60 call, you don't want the stock at 60. You want the stock at 65. You want the stock at 70. You want to get crazy. You want to see the underlying be like, the next Tesla, right? That's the only reason you'd be buying a 60 call. But if you bought the 60 call and the stock did soar, you could make a lot of money. The only problem is you buy the 60 call, and most of the time, what does happen? Okay. What happens most of the time when you buy the 60 call? You tell me. Most of the time when you buy a 60 call, nothing happens. The stock goes, I don't feel like moving today. Or the stock goes down. Or, it tortures you. The stock could go down, you'll lose your dollar. Stock could go up to 55, you'd still lose your dollar. Stock can go up to like 60, you go, but you still lose your dollar. Okay. It's torture. The only way you can make money is if the stock jumps and jumps substantially. So instead of buying the 60 call, I'm going to take it down here. We're going to go out and we're going to sell, a 60 call. And for that 60 call, we're going to collect $1. And they call that a credit. Now, for those of you that are brand new, I'm selling this in this first example, and just bear with me here. Just bear with me, okay? I'm selling a 60 call and I'm selling it naked. You go, but Don, how do you sell something you never owned? I'm selling myself into an obligation. You see, in options, buyers have rights, sellers have obligations. The buyer of the 60 call has the right to buy the stock at 60. Easy enough. The seller of the 60 call has an obligation to give somebody else stock at 60. You go, wait, whoa. Do I own the stock? I go, no, you don't own the stock. So what have I done? You've sold a 60 call and you've sold it naked. That's it. How much do you collect for that? $1. Can you make more than $1? No. Why would I want to do this? I can only collect $1. That's it. Listen, when you sell something, you like sell a car. Nobody comes back a week later and goes, that was a hell of a car you sold me. Here is another $500. Nobody's going to do that ever. Like no used car dealership, when you sell them a car, you're like, got that thing off my hands, and you're like kicking it out the door. But listen, you go out and sell a 60 call, but you're obligated to give somebody stock at 60. So what happens? Okay. So when you sell a 60 call, let's say first the stock stays flat. Okay. So if the stock stays flat, you keep your $1. Easy enough. If the stock goes down, you keep your $1, right? Because who wants the right to buy stock at 60 when the stock now is trading at, 45? Nobody. Who wants the right to buy the stock at 60 when the stock is trading at 50? Nobody. Let's say the stock gets up to 55. Who wants the right to buy the stock at 55? Okay, when the stock, is what? Well, who wants the right to buy the stock at 60 when the stock's trading at 55? And the answer is nobody. Even if the stock gets all the way up to 60, nobody wants the right to buy the stock at 60 when the stock is trading at 60. You can just buy it in the open market at 60, right? So there's all these scenarios, and you start to realize, he makes a good point. The only point that I want to make initially is that this, okay, is high probability. It's a high probability trade. But on the flip side, timeout. Could you take a big loss? Could you take a big loss? What could happen to you? The stock could go from 50 and all of a sudden news comes out, it jumps to 70. They find out that, Peloton doesn't really kill people and the stock jumps up to 70. Okay. Anyway, stock jumps up to 70. Then what happens? You go, oh no, you sold a 60 call. Somebody has the right to buy stock from you at 60. So if you don't own any stock, the stock is at 70, you have to buy the stock at 70 to give somebody the stock at 60, and you're going to lose $10. But you did initially collect $1. For right now, let's not worry about the risk. Why should I not worry about the risk? Because we're going to worry about the risk here in about 20 minutes. In about 20 minutes from now, we're actually going to show you in detail how to not just deal with the risk, we're actually going to cope with the risk with a coping mechanism. We're actually going to use risk mitigation tactics. But I wanted to show you just in premise what this trade happens to effectively be. We okay so far? By the way, now at this point, don't panic on me here. I want to take you into a live trading environment. And when I go into a live trading environment, I think people panic because there's a lot going on the screens. So right now we're on the platform Thinkorswim, but I actually trade a tremendous amount now on Tastyworks. For those of you that don't know any of the history behind this, okay, I originally worked at Thinkorswim. Thinkorswim was eventually purchased by TD Ameritrade. When it was purchased by TD Ameritrade, some of the original founders left. Okay, I stayed on for 5 years because they cut me a really good deal. Okay, I sold out. All right. Some of the other founders went on to start a company called Tastyworks, and it's the same founders as Thinkorswim. So we kind of use both, right? Because the logic of these platforms is very, very similar. In that regard, though, for today, some of you are very familiar with Thinkorswim, which is fine. I'm going to jump over to Twitter, and I just want to show you something. I'm going to open up an option chain. Okay. And I just want to bring into scope. We talk about like high probability trades and so forth. I could go out right now and I could create a trade. And I just want to show you right up here, just clicking on this and go options, theoreticals and Greeks and go to probability OTM, which stands for probability out of the money. Here, this is a trade that could have an 80% probability. Here's a trade that could have a 90% probability. When we talk about probability alone means nothing. Means nothing because I can go out And in seconds, I can discern this is a 90% probability trade. This will collect me a whopping 50 cents. It's not about the amount that you're collecting, okay? It's about the fact that the trade has a 90% probability of success. You guys with me so far? Because what we're starting to do, okay, what we're starting to do is just build a little framework for what we're going to do, and that is, okay, the ultimate trades. All right, we're going to get to ultimate trades, and ultimate trades, it's not just about putting on one trade. Ultima, okay, is a systematic way, okay, to make monthly income in this market. Again, that's what we're doing right now, and I'm going to show you by design how Ultima is effective, specifically, okay, in live markets. I'm going to show you exactly how Ultima is effective. All right, I just wanted to throw any stock up right now. I just wanted to throw a stock and just show you like, hey, here's a 90% probability, but you're only going to collect 50 cents. I think people kind of get that. Now, let's move a little bit forward from there. Back to those that are a little newer, okay? When you go out and you sell options, options decay. Options decay. And when I talk about options decaying, you know, when you look at an option that's currently trading for $1, like this is an option right here. And again, you know, I want to highlight it for a second. I'm going to do this example a little differently than I've ever done before. Okay. I'm just bringing up an option right here that's trading about $1. See it? It's trading for $1. And I go, that is what we term, okay, there it is. It is a 45 call. The question is, what is that option? All factors being held equal. Let's say the stock is at 38 like a month from now. What's this 45 call going to be worth a month from now if all other factors are held equal? And the answer is less, because as time moves forward, options do what? They decay. Options decay. So what happens in options decay? So as time passes, options you sold and they decay exponentially. So let's take a moment to review this. Now, a lot of you are intimately familiar with what this decay graph is. Everybody goes, that means you buy an option here and it goes eventually to zero, right? But everybody always hears that thing where the shorter time frame, the faster the option burns, okay? How many people have heard that before? The shorter the time frame, the faster the option decays, because options decay exponentially. Okay. Well, I'm actually going to give you an example, and it's an example that many of you have actually been through. So here's this decay graph. And let's say that you have an option, and the option is good, okay, for 1 month. And the option decay graph is going to look something like this. So you go out and you're going to go, this is exactly 1 month of decay. You're going to go out and you're going to buy, all right, let's call it a 50 call. And the 50 call is going to be trading for $3. This and $3 for a month. This is a high volatility, high impact underlying. This is a wild child of the marketplace. You go out though and you buy an option, a 50 call for $3. And what I'm going to give you right now is what happens to most of you that buy options. So you buy an option for $3 and it has exactly 1 month of time. A week passes, just a week passes. And after the week passes, nothing happens to the stock, and the option goes from what? Goes from $3 and all of a sudden, okay, is now worth what? $2, let's say, and 80 cents. So you only lost 20 cents in the first week. Anybody ever had that happen to them? And your first instinct is this, okay? You buy a 50 call for $3. Stock's trading, let's say at 50, it doesn't really matter. And there's only 1 month left. So a week passes, and that first week that passes, you only lose 20 cents. And the first thing you go is like, I'm okay. Look, I'm okay. I only lost 20 cents. And you're like, yeah, you are okay. But then you know what happens? Okay. Another week passes. The next week that passes, this marketplace is not going to be so nice to you. Now the option is going to be worth $1.90. You go, I'm hurting. I need the stock to move. Before you know it, the thing has already dropped to $1. Okay. I mean, a couple of days after you pass through a weekend, so you're at 280, then you're at $1.90. Then before you know it, a weekend passes, you're at $1. And at that point, you're like, screw it. I'm not even going to like sell the option because it's not worth it. And then it goes to 50 cents and then it's worth what? Nothing. How many people have ever lived through that? Anybody? Oh, come on. Again, admitting it is the first step here in trading. So one of the things I'm going to explain today, I think even those of you that are very, very experienced, by the way, this is the plight of the option buyer. Like, this is what happens. People that buy options, they go, I'm okay. I'm starting to hurt. I need the stock to move. I am dead. I am fully dead. And now I am actually totally dead. Okay. All right. And by the way, there's nothing like an option that you bought going out worthless. You're like, I'm worthless. That one, it always stings. And you'll never forget that either. Okay. So again, when people look at this, they go, it's like he could see my portfolio. I could for almost 15 years. So I want you to remember that example because I'm going to show you something that's really going to blow your minds. This is what we're starting to bridge the way now in the learning curve into what we term Ultima. Okay. And Ultima, it means a lot more than people will ever really recognize. Okay. So we're bridging the gap into Ultima. We're going to take this now into a bigger stock. Now we're going to look at $100 stock. Okay. And I'm going to, in this example, I'm going to go out. I'm going to sell an option. Okay. With 3 months of time. You with me? I'm going to go way out here and I'm going to sell, okay, a 120 call. And the 120 call, guess what? I'm going to make this nice and round. It's going to be trading for exactly $1 credit. So again, I'm going to bring it down here. I'm going to sell a 120 call so everybody can see it for a dollar, even dollar credit. And that option is exactly 3 months. Okay, that's it. That's the example. So I put the trade on. Now what do? I go, I hope. What do I hope? Why did I sell 3 months from now? Okay. Why would I do this? Why? How much margin is this going to take? Push all that aside. Okay. If you're looking at this right now, I'm going to sell it and I'm going to sell it naked. I'm going to sell it naked. Why am I going to sell it naked? To torture each and every one of you right now. I want to actually go out in this example and sell it naked. Don't worry about the margin because I'm going to tell you right now, you can have a $2,000 account and do that trade. You just have to know how to do it properly. So I'm going to sell a 120 call, and I'm actually going to sell it for $1 credit. I want you to recognize over the next 3 months, how far does the stock have to move? Well, first of all, if the stock stays flat, you keep your buck. If the stock goes down, you keep your buck. Even if the stock goes up, okay, to like 110, you keep your dollar. To 120, do you realize we have to make a 20% move to the upside? 20% move, okay, to the upside for you to do what? To start losing money. You could see that thing coming from a mile away. You're like, come on, bring the pain, bring it. Okay, it's 20%. Could a stock move 20%? Okay, is it likely? Well, over 3 months, given enough time, it could be. Are we okay with this example? I want you to think about, though, how high the probability in this trade might be. Okay, and the answer is it's very high. So it's we're selling way out of the money stuff. Way out of the money stuff, 20% out of the money, 3 months out. Now, why are we doing it? Why are we so far out in time? Why is this working? Okay. Now let's show you in context of the real market. We're going to go into the spiders. And again, if you're brand new to this, okay, this is where if you're brand new, you are going to be Alice and you are now officially tumbling down the rabbit hole. Okay, it's just the way it is. We're going to go into the marketplace. We're going to go exactly 85 days out. In my first example, we're going to go 85 days out. My next example, I don't even care. I'm going to go 121 days out. I'm going to get crazy with this. Now, what I'm going to do is I'm going to show you the power of time decay. And it's not exactly what you think. People, okay, don't understand what Ultima is really about. Let's go 85 days out. In this example, again, I'm going to use a call option. Why am I using call options? I'm using call options because they're easier for people to be able to decipher. Most people have a very tough time, okay, deciphering like, well, it's a put, it's a call. In this case, I'm going to go out and I'm going to find a call option. And that call option is going to be trading for, okay, right at $1. Why am I doing the example at $1? Because I did a couple little I guess fake trades over here a moment ago at $1. So I'm going to do this one. Look, what I'm doing is 85 days out. I'm going to go out in this first example, Okay, I'm going to draw it up here. I'm going to sell. Okay, I'm going to sell the 14th, okay, of April. This is terrible. Let me just make this easier. I'm going to sell, okay, the 14th of April, 502 calls, and I'm going to sell those for exactly $1. Okay, this is my trade so far. All I'm doing is selling the ape 502 calls. Ape is April. Okay, so I'm selling the apes 502s for $1, buck credit. Now what do? Absolutely nothing. I'm gonna do nothing. First thing is people balk at the idea. Why would you sell something so far out in time? Okay, seems crazy. Now, all factors being held equal, let's talk about option decay, because if you want to know what Ultima is more about decay. It's more about volatility. Okay, if you look at the 85-day option, which is the one I sold, right? I sold the 85-day option. I want to fast forward and look at the 58-day option. Why do I want to look at the 58-day option? Because this April option, okay, is the same as this March option. If I looked at a 502, what's the difference between a 502 in March and a 502 in April? And the answer is the only difference would be, well, this one has 85 days and this one has 58 days. So what am I actually doing? I'm effectively fast forwarding what, about 27, 28 days in here, right? So all I'm going to do is I'm going to open up the March options and show you the 502s. Why am I going to show you the 502s in March? Because I want you to see how much decay can come out of an option that has 3 months of time. Okay, so let's go right in here and let's look at the 502s. There they are. Guess what? 1 month from now, let's say that all factors are held equal, which is not always true, but let's turn around 1 month from now and let's buy, okay, there's still the 14th of April options, and we're going to buy back the 502 call, and it's going to be trading for, let's call it what? Roughly speaking, we'll make it 45 cents, which is not even the marketplace, but we'll make it 45 cents. How much can I make in less than 1 month? How much can I make in less than 1 month? Because you guys really want to learn what Ultima is about. In this context, I can make what? Okay, it's over 50% in less than 1 month. And I am selling so far out of the money. I mean, in this case, I'm almost, I'm almost 50 points out of the money inside of the spiders. That is a massive move. And I'm not asking anybody, people go, wait, so what happens to the trade? Oh, it's over. I told you that I was going to teach you to make income on a monthly basis. I didn't tell you which options I was going to use to do it. What is being missed in this business right now? Options with significant amounts of time have this unbelievable decay rate, but it's not a theta decay rate. It's actually a volatility decay rate. And you go, what? Okay, how could I have missed this? Most people do not look for this kind of stuff. I can even go 121 days at them. I'm just going to blow your mind for a second. I'm going to go 121 days at them also. Again, I'm going to pick an option right at $1. Look at this. These are the 515s. What's a 515 going to be worth just a couple of weeks from now? Do you know that you could sell a 515 call? 515 call, let's say it's trading for $1. What's the 515 call going to be trading at? Look, this is 120 days. This is 85 days. This is exactly what? About 35 days from now. So 35 days from now, what is the 515 call trading for? Watch. 515 calls trading for less than 40 cents. You can make 60% in 35 days. Who cares? You go, should I hold that to expiration? Are you out of your mind? You already made 60% for a way out of the money option. Why would you hold? Just do it again and again and again and again. Close the position. It doesn't matter like, oh, I didn't make the full $1. Who cares? Commissions now are negligible. You got to understand this is what the business has become. Okay. This is why we're selling options so far out in time. Maybe you noticed in the example, I sold options a few months out. Okay. Typically traders are selling short duration. That's why you're tuning into this webcast. That's why specific criteria. When I talk about criteria, I'm talking about the nuts and bolts. Why am I selling an option 120 days out? Why am I selling an option 85 days out? Because I'm going to tell you right now, that is what Ultima is. Okay, there are phenomenal rates of decay that everybody seems to be missing. And with those rates of decay, there's not much risk. You're selling options out here in the nosebleed section. You're so far away, you can't even see the field of play. That's where you want to be. You want to get in, want to get out. You don't have any directional risk in there. This is what we do at Theo Trade. We zero in on the criteria. We zero in, okay, on the mathematics of what is effective. Everybody good so far? Because we're going here. All right. I like to say this because again, this is where everybody asks for the nuts and bolts. Ask now, forever hold your peace. Okay, got it. Good. With this though, okay, what's the aspect we haven't really covered? Risk. See, the trades that we're doing are 90% probability. But anytime you have a 90% probability, okay, you got to bring into scope what the 10% hammer looks like. You know, this is the aspect that everybody just glosses over. You can go on, everybody always talks about, I was getting all profitable and I was on my, I was on my, island and boat when I was profitable like this. You got to push aside all the crap. Okay. By the way, I live on an island. I'm in Payson, Arizona right now, up in the mountains of Arizona, but I do live on the island of St. Croix full time. Okay. But I'm not the guy that comes to you and like, he's on his island trading. Okay. Listen, you got to bring into scope the reality of this. You have this 90% probability, but you have the 10% hammer. And the 10% hammer is, what am I going to do when I'm wrong? And if you don't focus on that, you're already dead. Okay. So 90% sounds great. But again, with all due respect, okay, what are you going to do when you're wrong? And you're going to get hammered. And I'm going to tell you, this is what happens to a lot of people. So for just a moment, the many of you that have sold some options premium, some of you have sold some options premium. Okay. By the way, I know people are concerned about the margin requirement. Don't be concerned about the margin requirement. We circumnavigate margin requirements. That's our job here. By the way, I feel it is my express duty as a 15-year brokerage veteran to teach you every nuance to get away from day trading margin regulations. If you want to sell options naked over here, we can work around margin requirements. It is my express duty to do so because you name a rule in the brokerage business, I guarantee you I know it. It's like an area of expertise of mine. Anyway, many of you have sold options premium, but you haven't sold it like this. You have learned trades called iron condors. How many people here have ever done an iron condor? Okay. How many people here have ever learned an iron condor? Many. Okay. What an iron condor is, and I'm just going to explain it verbally here because I need you, each and every one of you, whether you're new, whether you're experienced, to understand the inherent risks. Okay. What an iron condor is you sell a way out of the money call, then you sell a way out of the money put. Then you buy a call further out of the money. Then you buy a put further out of the money. Did I go out of the camera angle over there? It's kind of cool. Anyway, an iron condor is you sell a call, sell a put, buy a call, buy a put, right? And the risk graph looks something like that. Looks like that. Okay. I have to look at my own camera here to see. Looks like this. So you sell an iron condor. And an iron condor is a trade where you collect $1 and you might be risking like 9. And what happens to you in these iron condors is the marketplace leads you to the false sense of security. I need you to understand that 90% probability brings onto it the 10% hammer. And what that basically means, you're going to go out and everybody learns the same way. Okay. People go out and they sell the iron condor. They went to some class, they plunked down $500 or $1,000 to go to some class. And the class taught them iron condors. Okay, so you go out and you go, I'm going to try what I learned in this class. And you go out and you put on an iron condor. Great. Okay, so you put on the iron condor and you do it in a product called the spiders. Why? Because the spiders are a softer, gentler, easier way to get involved in the marketplace. Anyway, you sell your iron condor. What's your risk in there? The risk is big. Basically, you sell something for $1 and you're taking almost $9 of risk. But guess what? You put the trade on and the very first trade you do, boom, it works. You're like, holy crap, it actually worked. You're shocked. Time out. Should you be shocked that the trade worked? No. Why? Because the trade that you did had a 90% probability of success. But the irony is nobody remembers that. They just put the trade on and they go, shocked this thing actually worked. So the next month, you do the same trade in the spiders. But instead of doing one contract, then you do like 3 or 4 contracts. You're getting a little crazy with it, getting freaky with the spiders. So you go out and do the same trade, but you do 3 or 4 contracts. Lo and behold, the second month, it works again. You're like, oh, I think I can do this. I like this. By the way, okay, on the third month, you're like squawking your feathers already. You go, I'm not trading spiders anymore. Now I'm moving to the big boy product. What's the big boy product? It's the SPX. By the way, the SPX is where newer traders, okay, go to die. That's what the SPX is. And if you hear that and you go, that's not very nice, really, I have a right to say that. Okay. I worked in there. I stood in there. I know the SPX. It is the beast. It's the mother of all products. So for those of you that don't know the SPX, it's a $4,600 behemoth, okay, that takes no prisoners. The SPX, again, is the mother of all products. And doing one contract in the SPX is the same as 10 contracts in the spiders. So now you step into the S. That's what they call it. The SPX, you step up into the SPX and you go, I'm going to do a one lot in there. But remember, a one lot in there is like 10 in the spiders. So you do your one lot in the SPX. You're way out of the money. And in the fourth month, you're profitable again. You're like, holy crap. I can't even believe I'm doing this. So you've gone through at least 3 or 4 months now and you've had profitable, 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 profitable. And that's where I always remind you, what did you think was going to happen? You're doing trades that have a 90% probability of success. By the way, on the 4th or 5th month, let's get crazy. Let's say it's the 5th month by now. On the 5th month, as I say, you're squawking your feathers. And you step into the marketplace, you go, I'm going for it now. Now you do 10 contracts in the SPX. 10 contracts in the SPX is the same as 100 lot in the spiders. Okay. You're talking about selling premium at cocktail parties at this point. Okay. Zoom cocktail parties. I don't think we have real cocktail parties anymore. Anyway, you're talking about selling iron condors at the cocktail party. You did a 10 lot. The way the marketplace the whole time has just been kind of goading you. Come on, little more, 10 lot. It waits for you on the 10 lot and it goes, gotcha. On the 5th month, you take a complete and total loss. Market has a violent move to the downside. Okay, that violence is between you and the SPX. You don't get out in time. You do take a loss. It's not even a full loss, but you lost 7 of the $10 that you could lose. Not only do you end up losing on that trade, but that one trade, because you did 10 contracts, offset all the profitability of everything you've done prior to. And it takes about half your brokerage account at this exact same time. Has anybody ever lived through this before? Okay, that is the plight, if you will, of the iron condor trader. Okay, and if you haven't lived through it before, let me tell you, and I say this without hesitation or unequivocation, you will. Everybody does. Okay, it's an absolute train wreck, and you can see it coming from miles away. And when people listen to this, as I talk through it, they go, "Holy crap! It's like this guy could see my account." I could, for about 15 years, see exactly what you did. And we studied this and we watched people, okay, and they would just build size and build size. I watched one individual in particular, okay, not have one losing trade for 19 months until he wiped out his entire account and owed us another $100,000 for what? Okay, because he just kept anteing up, anteing up. The strategy does not work effectively that way. Okay. Again, so you go through this life cycle of make money, make money, make money, make money, get crushed, lose half your account. Okay. Then after that, you go, but it was working. So you go back and you take another $500 class and you go, I'm going to learn to fix it. I know I can fix it. Fix is a really dirty word. Okay. This is where I actually get, I get a little angry about this. 15 years in the brokerage business, and I'm a total cynic. I'm a total cynic regarding good trades gone bad. You know what people don't realize is that anytime you're fixing anything, all you're really doing is adding, okay, to a losing trade. That's it. You're taking more good money and throwing it down a really bad hole. And the other thing with fixes is they rack up more transaction costs. It is, again, very definitive. You cannot fix a trade without adding more risk. It's impossible. Try to figure that one out for a second. You cannot fix a trade without adding risk. Now, some fixes may work, okay, but the very notion of fixing a trade, okay, throws more good capital after bad. By the way, some people don't call it fixing a trade, they call it morphing a trade, okay? It's an iron condor with a butterfly with this. Like, I've seen it all, okay? And it's all for nothing. You got to understand, when trades go bad, this is the best analogy. You got to chuck it out like yesterday's trash. If you took a brand new car, you drive it off of a cliff, Preferably you're not in it. Take a brand new car, drive it off a cliff, and then bring it to a body shop. What are they going to tell you? They go, that's an amalgamation of crap. What am I going to do with that? And you go, I want you to make this car precisely as it was when I brought it out of the dealership 3 weeks ago. And they go, yeah, okay, we can do that. They'll give you the car back a couple of months from now. It'll never be the same. Okay. You'll have paid double. That's why insurance companies go in there. It's a total. Okay. Listen, you're going to learn and have to learn how to do this right. Okay. You got to do this right. You got to structure the positions effectively. Now, okay. Now we're actually going to show you effective position structuring. One of the first things I want to elaborate on before I go into too much detail here. Okay. One of the first things I want to elaborate on, we're going to look at the spiders. So I'm actually going to go ahead and bring up the spiders for one more second, because the spider is a very effective product. Let's call it a $560 product. So we're going to be looking at the spiders. Okay. And the SPY, SPY is trading at, let's call it 460. We're going to come out here. We're going to sell, okay, calls in a couple of different places. We're also going to come out here. Okay. And we're going to sell puts in a few different places. So I'm not going to sell on one side of the market. Okay. I'm going to sell on one side of the market and additionally the other. Why am I doing so? Okay. From a margin point of view, if you sell these and you sell these, it doesn't tie up more margin. Why? Because markets can go higher or markets can go lower, but markets can't split. Even if the stock splits, it doesn't mean that it goes up and down at the exact same time. Gotcha on that one. But think about it from a margin point of view. If you sell calls, consequently, you should also sell puts. What's the problem with this? What is the inherent problem with the entire strategy? What's the inherent problem with the entire strategy? I'll tell you exactly what. What if we crash? What if the SPY, okay, is sitting at 460 and all of a sudden just takes off to the downside and you're like, yeah, we're on fire, ends up at 380 a couple days from now? What are you? And I like, listen, okay, as I said, I want to separate the fact from the fiction, the myths from all the crap that's out there. Bring to the surface the problem with this strategy. The market's at 460. You could go through a violent crash. Market could be at 380 a week from now. What are you going to do? If you sold naked, you're going to suffer horrendously. Okay. That's not what we do. Enter the hedges. So what we're going to discuss right now is how to build a position. Now, before I go any further, time out. Before I go any further, I'm going to tell you this. We at TheoTrade provide trading alerts. The trading alerts, okay, specifically go through every nuance, okay, of these trades, execution, open to close. And I throw that out here because the first time people see this, I don't want you to be intimidated by it. I want you to understand that there is a little bit of a learning curve. But let's be frank, anything you've ever done in your life, okay, you're gonna have to work a little bit at. Like nobody just, rolled over and they're like, money, we found it. Listen, markets are getting volatile right now. Selling options premium isn't just about survival. It's like, this is what you need to do because it's not going to be a, what are you going to do? I'm going to buy Zoom and hope it goes up. I'm going to follow Kathy Wood into an early grave right now. Okay. It's almost impossible to be a stock picker when the marketplace gets volatile. You're going to have to learn how to do this. Listen, we have the SPY and I want to bring this entire position up now. Now we're going to show you kind of the full Monty. The SPY is trading at roughly 460. Do we own the spider? Nope, we do not own the spider. Okay, we do not own the spider. Before I've gone out and sold anything, before I've gone out, okay, enter the hedges. Enter the hedges. What are the hedges? There are 3, okay, types of hedges that I use. Number 1, okay, RTS, better known as a risk twist spread. Okay. Number 2, I'll explain what these are. Number 2, okay, is a VIX vol spread. Okay, explain that in a moment. Number 3 is what we term a gamma iron. Okay, enter the hedges. What are the hedges? The hedges are risk mitigation tactics in place. When are they in place? They're always in place. What do they cost? Next to nothing, negligible cost, if anything. Okay. If you take a look at a VIX volatility spread, I don't even want to go that much depth into this, but what is VIX? Okay. I want you to remember something. When the market goes down, VIX goes where? Up, and the VIX explodes. The VIX vol spread is the easiest of the hedges for you to interpret. What a VIX vol spread does is we buy a very, very little VIX trade. Why do we buy a very little VIX trade? Just a little bit of VIX over here, just in case if the market crashes, the VIX provides cover for us. The VIX trade explodes in value, okay, which is a rarity. But if the market crashes, you need the VIX vol spread because it's a duck and cover trade. It provides cover for us ultimately, okay, so we do not get crushed on the risk that we're going to put on. And let's actually show you what the risk that we're going to put on looks like. Consequently, I'm going to go out in this case and I'm going to sell, okay, up here like a 505 call. I'm also going to turn around and I'm going to sell, for instance, a 515 call. Now this one could be done probably in what? The March expiration. This one could be done in the April expiration. I could come out and probably sell a couple of different calls. And this one, maybe I'm collecting $1, and this one I'm collecting $1, and this one I'm collecting $1. I'm just making it easy. But at the exact same time I'm doing that, I'm going to be out here. Okay. I'm going to sell, for instance, a 370 put. Ironically, this one, now I'm going to collect at least $2. You're going to collect a lot more in the puts. I'm probably going to be selling all the way down here, like a 350 put, collect like another $2. Okay. I may even be able to sell as far out as like a 330 put. Again, what am I doing? Putting on a little inventory. This is an inventory management business. This looks like a lot. It's not. You have 6, maybe 7 little trades on, and those 6 or 7 little trades, like a lot of you guys have more than that on. You probably own more stocks than that, but I'm going to go out there. Okay. I'm going to sell a little bit out here. I'm going to sell a little bit out here, and I'm always going to have one of my hedges on. Okay. The hedges are what? They're preemptive hedges. What does a preemptive hedge means? It means it's on there just in case. Just in case what? Okay. Let me show you what this VIX volatility spread can do for you. All of a sudden, okay, the marketplace starts to just tear to the downside. And as the marketplace tears to the downside, don't forget, you have a little bit of a VIX spread on, okay? This is your VIX vol spread. And what your VIX vol spread does, as the marketplace comes down, okay, it's coming down fast, the VIX vol spread just ignites, all right, in terms of profitability. You could still take losses on these, but that VIX vol spread is there. It's an umbrella to cover, okay, the vast amount of your positions. We show you exactly how and where to use the VIX vol spread. How much VIX do you need, okay, versus the portfolio? This is a lot easier than it looks. So the downside, we're providing you a definitive downside coverage. Then you go, well, what about the upside? The upside, we use a strategy called, okay, a gamma iron condor. And the gamma iron condor is interesting. It's interesting in respect to the fact that it's the opposite of many of your trades. If the marketplace explodes up, the gamma iron helps cover, okay, these trades. If the market comes down, it can also help cover the downside. The gamma iron, I'm literally buying a trade against the trades that I'm selling. Why? Because it's a really effective means right now of mitigating risk, okay? Again, these are initially 3 tactics that we use to mitigate. When I say mitigate, to control exposure in the overall marketplace. The key to everything that we do here, is knowing these options, the right options to sell. Okay. The other key is knowing that these hedges are there to mitigate your risk, right? This is what Ultima really breaks down to. All we just keep doing, sell premium, cover it, sell premium, cover it, use a couple of hedges, sell premium, bring it in. You do realize that like 95 to 97% of the time, these positions go swimmingly. Nothing ever happens. The market even got crazy recently. Like I'm not sitting here going, but still my heart. Okay. Does it look like a lot initially? Absolutely. But as I said, okay, this is something that we do every single day and we provide the trade alerts for it. This is why you want to sell premium. Premium can now be sold in extremely small accounts. By the way, you know why I put 5,000 in there? You have to have 5,000 in the retirement account to do this. In a regular margin account, it's $2,000. This produces positive decay, may enhance existing positions. You can actually use these trades if you own stock. You could actually sell premium against the stock that you own. Okay. There's actually, again, a lot of depth in that. May enhance existing positions, provides a high probability of success. By the way, you know what? I can't even mention that enough. You have existing positions on. Maybe you own some Microsoft. You learn Ultima against Microsoft. It'll enhance the Microsoft position because Microsoft, we had one day last week, the thing was actually down 13 bucks in a day. You own 1,000 shares and you're like, this is not going to go well for me. Okay. You can offset some of that, learn to enhance it. High probability of success, never need to buy or sell the stock. And the critical part is this is not about market direction. You'd be wrong on market direction and still come out profitable. I'm telling you right now, you need this in your life because how much predictability do you have in a marketplace? I know you woke up this morning, we're going to rally right until the point we sold off. We're going to sell off right until the point we just rallied back. What's the end of the day going to look like? I don't know. Okay. Submit to the power of the marketplace. It's volatile right now. When's the best time to sell options premium? In the midst of volatility. Listen, selling premium could potentially bring in really consistent returns, and we're going to teach you to mitigate risk. You want to learn to do this the right way. We're going to discuss criteria here momentarily. What criteria is, it's the nuts and bolts behind this. What criteria is, it's the recipe and effort to be able to build the trade. It's specifically what expiration, what products. Before I get there though, here are actually live trading alerts, okay? Variations of all of the following trades. All of the following trades can be done with as little as $2,000 in a funded brokerage account. I know that that's like the 10th time I've mentioned this, okay? And can be done inside of retirement accounts. What I'm gonna do, just real briefly, I'm just gonna throw this up. This is a live premium selling trade alert. These are trades that have been sent, okay, to over 6,000 Theo Trade clientele. I'm starting on a trade that's a little bit over a year ago, but I'm going to show you, okay, verbatim everything that we actually sent out last year. And I'm going to tell you right now, we're on slide 35. I'm going to run through over 100 trades. I'm just going to really, really briefly show you what the trades look like. Not every trade's a winning trade. That's okay. Hope you guys are all right with that. But what I'm showing you here is like a Tesla short call, and I'm showing you selling premium in here. What I want you to see, okay, this is the opening trade. This is the closing trade. See, to open to close. It's Tesla. The exact date, time, everything is in here. The strike price we traded, the opening price, the closing price, and the return, okay, on that particular trade. Is everybody okay? If you're curious where this comes from, I'm going to show you exactly where it comes from. I provide, okay, full disclosure on everything that we do. And I'll just give you a quick example. If I pulled back like the last 300 days in the spiders, okay, you can see everything I've done for 300 days in the spiders. All I've actually done is taken these trades, like to open to close, to open to close, to close, to close, to close, the opening and closing, and I've put it, and I've just matched them up a little bit easier inside of the slide deck. Anyway, Tesla short call, 83% return, 90% return, 58% return. Now, time out. This is what we call the Theo Theta portfolio. Okay, this is a full 1 year. It's every trade that I've done for this specific portfolio over the course of a year. Okay, as I promised, it's a year of trading. Okay, I trade a lot. I'm pretty active, but in this portfolio, I'm very, very selective. Sometimes I trade bonds. You can see bonds right here, 57% return. Some people go, I've never traded bonds. You know, one of the reasons to trade bonds, it's a great product, and it's really, really light in margin. Okay, so you can see bond short put, IWM short call, like IWM. Here's another 53% return. Okay, I'm just going to run through Tesla spiders. Okay, as I start to run through, you guys are going to see every single trade that I've actually done in this particular portfolio. Okay, By the way, most of the returns are around what? 50%, 50%. Okay. Here's a 19% loss. Look, it happens. Here's an option I sold for 94 cents, covered it for $1.12. Okay, 54%, 52%. And I'm just scrolling through. By the way, I'm through like pretty much the first quarter of last year, and I'm still just ultimately scrolling through. What am I doing? IWM spiders, bonds. Okay, I think some QQQ back to the IWM. Okay, bonds. You getting bored yet? IWM. Oh, Philip Morris, that was a different one. Bonds, Tesla, QQQ, Amazon. All right, QQQ, a lot of QQQ, a lot of spiders. Okay. Timeout. When we got about halfway through the year, I switched to the ES options on futures because for margin, these things are absolutely phenomenal. Okay. Still scrolling here. Now we're actually trading QQQ and S&Ps, right? All 50% plus returns here. And I know I'm flying through this. We're now what? Every one of these trades is an alert. Every one of them, okay, is being blasted out to you. Bond short call, okay, 56, 30% return. Okay. And then when we started getting into a little bit past the halfway through, a third of the way through, I started to up the learning curve. This is actually called a Christmas tree spread. The Christmas tree spread is done for a very significant credit. But the nice thing about the Christmas tree spread, a Christmas tree spread has a built-in hedge to it. So we don't even need to go out and to use a VIX vol spread. This has an internal hedge, 85% return. Here's a QQQ short call, TLT. So that's a little bit of bonds. S&Ps again. Okay, here's one only 19% return. Again, every single trade in this particular portfolio. All right, here's another Christmas tree spread, both opening and closing. Like people, 92% return on here. It's a $22.43 credit. ES, okay? That's the entire portfolio for the year. I mean, I just went through, again, we started on literally on slide 35 through slide 133. So it's just under 100 trades that I did in this past year, okay? Ultimately, very, very minimal losses. There couldn't have been and still exists as one of the best times to be selling premium, okay? Anytime since you got to go back 20, 25 years to have sold premium this effectively. This is a great skill set right now. It's going to learn and that you're going to learn and it's going to last a lifetime, okay? Most people are presently working from home, hopefully have enough time to do, a little bit of this and to actually learn the skill set. This is very part-time. Like I don't want anybody to think that you're having to sit in front of the screen every nuance. We're going to go out, we're going to sell premium, we're going to get back, we're going to manage the risk. Okay. So this is how to emerge from this pandemic. Take advantage of the volatility and emerge stronger and better financial shape than when you went into it. What our members are saying, just scattered a couple of these from some recent conversations. MJ, Don's intraday SPY puts method doubled in value in the most recent down move. Marianne, I'm with you, Don K. Those trades make money. I want to thank Don Kaufman and TheoTrade for doing a great job. Okay, Kevin, I absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. I can't pull away for more than 15 minutes. I can't get any work done. Guess I shouldn't show you that one, but I found it amusing. Okay. If you don't have a lot of time, again, what we're teaching here specifically today in Ultima, this is hands off. Every trade that I showed you today was a trade alert. Every single trade was done live here at TheoTrade. When I say live, like you don't have to sit there in front of the screen and go, is he doing it? Is he doing it? There's a portfolio. I'll show you. Okay. There's trade alerts. We'll show you those. What does a trade alert look like? Okay. We have mobile applications where we actually fire trade alerts right to your mobile device. Okay. Listen, selling premium is hands off. You can even use set it and forget it order types, which are GTC, that's good till canceled. So even if a fraction of your time is enough to see really positive results, okay? Some of the characteristics of selling Ultima Premium, the attributes of selling high probability premium are undeniable. You're never buying or selling the stock. The risk, we're going to help you fine tune the risk to your comfort level. It's not my comfort level. You're never going to use a stop order, ever. Okay, stop orders will not save you in this business from a massive overnight move. You're selling naked options premium, okay? It takes nominal amounts of margin, but a stop order is going to lead you, okay, to destruction. You're going to learn to use risk mitigation techniques. We're going to teach you to vary time frames to further minimize the risk. The probability of profit's high. I keep mentioning that because most of the time, it sounds like some work. Most of the time, okay, this is inventory management. Put an apple on the shelf, oh, rotten apple, chuck it. Put the apple on the shelf. All you're doing is just burning through inventory. This is like you want to be the Amazon, okay, of trading. You just want to burn through inventory, make your 50%, get in, get out, get on with your life, right? It's the perfect strategy to enhance a stock portfolio, but it's also an excellent tool if you want to build returns, incremental returns, and new products. Allow for the sale of options in nearly any account size. You have $2,000, you can actually do this right now. Now, building a portfolio of options. That's the part where, I come in here and I tell you right now, do not let options intimidate you, okay? This does have a little bit of a learning curve to it, but we hold your hand in the learning curve, okay? And then after the learning curve, we're just firing out trades and trade alerts. Selling premium can be done for, again, minimal credits and minimal risk. However, the sale of premium, you got to understand, okay? We could fire out alerts to you all day long, but you still have to understand the context of what you're doing. Because I like to put it in here as this is a massive power saw. If you're going to build a house, you'd probably use a power saw. But if you did not know how to use a power saw, you're going to lop off a couple of fingers. Options, they're going to be the exact same thing. Options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you do not know how to use options properly, you lop off a couple of fingers, okay? You got to remember that because, again, there's a reason that I'm going through here. There's a reason that we're teaching you the logic. You can sell Ultima Premium and minimize risk. If you don't know options or have limited experience, fine. Don't let that part intimidate you. Okay, the part that I stress, looking at this marketplace, and I've been saying this for months and months, okay, you will need to embark upon these strategies in the foreseeable future, okay? It's party's over. Punch bowl is going away. Yeah, I'm talking about the Fed, okay? And I want people, as I say, and I put this in here, be prepared, not scared. And that's, I hate cheesy sayings like this, but the bottom line is, the forward future, no one has insight. Are they going to raise 50 points, 50 basis points? Are they going to do 4 or 5 rate hikes? It doesn't matter. Everything that's being done right now, okay, is to one end and one end only, and it's going to just drive volatility. That's it. You can summarize everything that's going on in the business right now as it doesn't make a difference. It's just simply going to drive volatility. That's what this does well in. We can show you how and when to sell premium in a matter of a few hours. Then we provide trade alerts, but TheoTrade creates detailed recipes for every strategy, including selling premium. You wouldn't bake a cake without a recipe. Why do you trade without one? Listen, this is what you need to know to successfully sell Ultima Premium for a living, okay? What underlying stocks or indices make the best Ultima Premium selling candidates? Did I help you out with that? I mean, I just brought this up like 5 different times. Like, what candidates? Well, apparently the spider. He likes the spiders. What else does he like? Okay. Oh, he likes the bonds. What else does he like? Oh, he traded a couple of products in there as well. Okay. Bottom line, the products that you trade, okay, will give you very, very deep insight to this. See, the key, when I say the product that you trade, should I trade the spiders? Right now it works. But I'll tell you what volatility should I seek out? Too much volatility? It's not going to work. You're dead. Too little volatility. It's not going to work. You're dead. To select the candidate, you have to know what volatility construct you should be in. Volatility, okay, needs to be contained in somewhat of a jar. You don't want too much bubbling out of the jar. You don't want too little, okay? Volatility has to fall within a very definitive framework, okay? Next, what options expiration do I select? If you'll notice, okay, throughout the course of today's session, let's go back over to the spiders. Okay, look how many expirations there are. If you sell short duration options now, more power to you. You're going to get killed doing it. Short-term options are horrible to sell. We want to sell further out. There's 58 day, 71 day, 85 day, 121 day, 49, 149 days. What options expiration do you select? There's a lot of expirations to look at. We will help you dial in. Okay, exactly what expiration. That's what criteria is. What should be the delta of the option you sell? Meaning that the probability, delta and probability, okay, are analogous with one another. We'll give you the probability, the delta of the option you sell. What options do I buy? What I'm talking about here, what options do I buy against my position? Talking about a VIX volatility spread. Okay. I mean, what do you buy? And by the way, everybody was always asked the question to go, I'm scared of the VIX thing because I don't want to spend money on a hedge. You'll spend money on a hedge, you're going to die trying. Okay. I'm going to show you right now. What am I spending on this hedge? Look at my account, right? These are trades. Okay. They're recent. Here, look, there's the hedge. 5-cent credit, 3-cent credit, 0, 0, 0, 0. These are hedges. Am I paying for the hedge? I am not. Okay. We teach you again what I would term a couple of tricks of the trade, right? This is what trading is about. You're going to learn how to hedge and how to do it for next to nothing. How do I build my position? When I say build the position, how many options do I sell? How many options do I buy? Okay, right? How many of those VIX spreads should I put on? Do I need a large amount of capital in my account to do this? Absolutely not. $2,000 you can start with to sell premium. Now, it's not that exciting with $2,000, but I am telling you right now, unequivocally, you can sell option premium with $2,000 and be able to manage that risk. What's the right amount of risk for you? We'll help you dial that in. What are the percentage returns supposed to be? Every one of those trades, I just ran through like 100 trades. Every one of those trades, what was I doing? 50%, 50%, 50%. I'm going to tell you right now, it's about 50%. You got to be basically turning and burning. Just go ripping through inventory, 50%, 50%. You start looking at my inventory here and we'll drop into my portfolio and say, what is he making? What is he losing? I'll show you everything. Okay, we're complete. Again, full Monty here. How do I protect myself from market crashes? Those VIX volatility spreads are going to be a start. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Okay, when I talk about like recipes in trading, I'm going to tell you exactly what this is based on. And early on in my career, my trading career, I lived in Scottsdale, Arizona, okay, and commuted to Chicago. Spent a lot of time on aircraft, a lot of time on aircraft. And every time I would get into the plane, I flew so much, they always bumped me to the front of the plane. And I would always like kind of lean over and always watch the pilots in the cockpit. And they were always going through these highly detailed checklists. And I've actually seen them before. So I started building the education for Thinkorswim using very, very similar checklists. Okay, meaning that, all right, step number one, what product do I select? Step number two, what should the liquidity be? Step number three, what should the volatility be? And going through and giving you check, 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 check. What we do here at TheoTrade, though, takes it to completely different universe than we were able to do at Thinkorswim or TD Ameritrade. I'm going to tell you exactly why. When you work for a major brokerage firm, the regulators do not let you imply anything in terms of what is the right option to select. All you can do when you work for a brokerage firm is go, here's a trade, and then step back. You can make money, you can lose money, and then step back. We can show you trades, okay? We left that regulated environment, took, okay, with us all the data that we had on what works and what doesn't. As I said, I got to watch order flow for 15 years. Where do you think these recipes come from? From 15 years of client order flow and precisely dialed in what works. Ultima premium selling, okay? This is, again, like 15 years compilation of great criteria from literally billions in others' experience. That's what we do here, is create these recipes. These recipes are all about answering what ifs, right? So this pilot goes through this checklist and check, check, check. They walk outside the plane, they're like grabbing on the engines and so forth. But it's the same thing as what might be a good stock or ETF candidate. What's the correct option expiration? How much capital do you commit? What strike options do you sell? Which ones do you buy? Okay, how can I limit my risk? TheoTrade has those answers. We build recipes with definitive criteria. They're literally our checklists for each strategy and each unique variable. One of the things I haven't even covered yet, I'm just talking about the recipe to be able to get in. Then what do you do when you're actually in flight? Once you have trades on, what if the market goes up? What if the market goes down? What if we crash? Okay, all of those are unique variables you're going to encounter. What's the right probability for the trade? How many option contracts for the account size? When do you close your premium sale? What if we sell off big? Do you bail out of the trade? What if we rally massively? Can I fix a losing trade? We have the answers to those questions. How, when, why, at what price? And I'm telling you right now, it is just the beginning of the variables you're going to face while selling Ultima Premium for a living. Listen, you can read what selling Ultima Premium is. I like to throw this out here because people are going to be like, I'm going to Google this. Okay. You can go out there and you can Google all day long what selling premium is. Maybe you've even placed a couple of trades. Maybe you even understand a little position structure over there. But I'm going to tell you right now, that's not what this is about. You Google this, 10,000 pages are going to come up on what selling option premium is. They don't really tell you what Ultima is, okay? But I'm going to tell you, the difference here is you need TheoTrade's recipe for success. You need the TheoTrade alerts. I have 20 plus years of trading experience. That's just me, okay? I had access to client order flow for 15 years. Again, right? TheoTrade is not a one-trick pony. We have 7 other full-time instructors that had input to this, viewed and studied millions of trading accounts while both at Thinkorswim and TD Ameritrade. And I ran education for 15 years at the firm that had the single largest options order flow. We had more insight than any other firm on the street. That's where this criteria comes from. Criteria is your recipe for success. And the following strategy and the corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this particular trade. We spent years, okay, building the steps for Ultima. And when you approach the section on criteria, you follow the steps to be able to build the trade, okay? We built a full 5-hour, full-blown course on here. Well, immediately everybody goes, oh, it's another course for $500. It is not another course for $500. Time out again on here, okay? I want everybody to know right now, what we do here at TheoTrade differentiates any other education company out there. I'm going to show you that in a moment. We do, in fact, have a 5-hour course that I absolutely, unequivocally want you to view the 5 hours. After you've been through the course, you just follow some of the trades that we do. Okay, you have all the support in the world. I'm going to show you what TheoTrade has, what TheoTrade is, and how we actually support clients. But I tell you right now, okay, at $500, you could go out and you could spend $30,000 on a stock market education, an options education, and it will absolutely pale in comparison to what we do here at TheoTrade. And I'm actually going to show you that here momentarily. So stick with me. We have, okay, a few other odds and ends here that we provide to you. What we do here at TheoTrade, we do not sell individual courses. We will not just go out and sell the Ultimate Income Generator course, okay? TheoTrade goes beyond that. We go beyond an indicator like most educators. And again, I've had the fairly unique experience while working at the brokerage firms. I watched other educators, they sell a class for $500 and you take the class, great. Then you have to pay $500 for an indicator that goes with the class. Before you know it, you got to pay $500 to learn how to use the indicator that went with the original class, but then all of this is obsolete. I bought another class for $500 and then they have another indicator for $500 and the cycle just continues. Ridiculous, okay? We have 6,000 clientele here at TheoTrade. We're comfortable saying that. We do not go out and sell class, sell class, sell class. What we do here at TheoTrade is all encompassing, okay? We will provide everything that you need in this business, soup to nuts, from absolute beginner to the most extreme. We have 8 full-time instructors. We provide you everything from trade alerts, okay, to chat room to support, meaning that you can email. And when I say email, you're not, talking to anybody. You talk to me on an email. You can ping trade ideas off of us. And we do it all. And I'm going to tell you right now, there's even a discount below the $500. Stick with me, okay, for the next 10 minutes, and I'll explain to you exactly what we do. So the Ultimate Income Generator course, I'm the trade instructor for this one. It's a 5-hour course. It is archived and available immediately. We prefer to kind of record the classes, then I clean them up, okay, make them perfect, get them out, and they stream 24/7. When I say they stream, you can download it. Okay, you can stream it anytime. You can stream it off the website. You can stream it onto any mobile device. You can stream it onto your phone if you so choose. Okay, you can even download the TheoTrade mobile application. So you watch this anytime you want. You can even watch it at 30,000 feet. There is a slide deck that goes with the class. That is where the criteria is found. That slide deck, okay, you can download it immediately. Like literally, I'll show you how to sign up for it. You download it immediately. But I'll reiterate, we are more than a class. We don't give you a class and then give you a little pat and then go, oh, okay. And I'm going to show you just that here momentarily. Before I get there, here's what the Ultimate Income Generator course curriculum happens to be. You're going to learn how to generate consistent returns, okay, in the premium selling options curriculum. You're going to learn how to build a high probability portfolio with trades that generate, okay, consistent monthly returns, regardless if you're starting capital or experience. We're going to give you detailed, highly detailed entry and exit criteria for selling options premium, okay, while keeping risk at a minimum. You're going to discover option Greeks, okay, and learn how to manage. And I just stress this to you, okay? You are going to learn how to manage all of your positions through one easy number. You're not going to have to sit there and try to dissect it. Okay. In addition, you're going to learn to use a risk array. What is a risk array? It's a way to actually view. Okay. It's a way to view forward risk. And it's a way to visualize precisely what your risk is. If the market goes up or down, you're going to love it. Like there's an hour and a half on the course in risk array, that's my baby. Okay. I absolutely love teaching that stuff. You're going to learn how to allocate in a way that reduces risk. Okay. And actually reduces some of the margin so that the portfolio becomes even more part-time. You're also going to discover risk mitigation techniques. That's hedging. You're going to learn to hedge in the most extreme market environments, which looks like it's forthcoming. You're going to learn how to sell premium also in small accounts, okay, and or a retirement account with innovative new trading products that are only very recently available. So an account with as little as $2,000 or $5,000 in an IRA can do this. Now, before I go any further, we also, right up front, we tell you, there's no risk in here. TheoTrade is completely riskless trade, 90-day money-back guarantee. Check us out for the next 90 days. And I'll explain, okay, what we do here, okay? We get you enrolled for 90 days. It's not a membership, but it's 90 days. 3 months to get a feel for what we do here at TheoTrade. If you're not happy anytime in the next 90 days, in the next 3 months, just email us. No excuses. There's no stipulations. We used to have stipulations like you got to do this, you got to do that, jump through a couple of hoops. Forget it. It's all for nothing. Okay. Just go in there, check it out. There's absolutely no risk. By the way, one email. I want my money back. Done. Okay. We have 6,000 clients. We want people to be here that want to be here. So there's a money back guarantee. It's got no stipulations on it. No excuses, no questions. I mean, hey, if you want to send us an email and give us some feedback, okay, I'm a big boy. I could take it. Right? Most people go like the greatest feedback I get, they're like, oh my God, this is overwhelming. Okay. I don't know. Would you rather be overwhelmed or underwhelmed? When you go onto a site for the very first time that is education, you don't want to go in there and go, oh, this just doesn't have enough for me. It's going to have an abundance of it. Okay. That's why there's 6,000 clients. That's why we have people from the absolute novice that have never traded a single thing to market makers. Okay. All the way in through. Listen, you want to enroll for it? It's a 90-day money back guarantee. Go to theotrade.com/Skew. Now I'm going to take you to the site briefly. Okay, and show you what's on here. And then we are going to get into what some of the bonuses happen to be. And there are bonuses today. So if you pop in here really quick, okay, Again, it's theotrade.com/Skew. It's S as in Sam, K as in kick, E as in echo, W, theotrade.com/Skew. When you come in here, simply click add to cart. I'll explain what all of this is. Simply click add to cart. There is one little nuance, and there is a reason I'm actually throwing this up here. There's one nuance. Add your phone number in here. Why? Because with your phone number in there, it allows us to instantly enroll you for text messaging. So you'll get all of those trade alerts. Okay. Again, it's totally risk-free. If you're not happy in the next 90 days, like I get it. You got to see the courses. We'll even let you keep some of the bonuses, which I'll discuss here momentarily. But I like to throw this out here up front. I mean, no one does anything like this. We just totally no holds barred. Okay. theotrade.com/Skew. You can enroll now. There's no risk. And by the way, yes, we're going to give you a discounted price for the next 90 days. Okay. You want to know what it is? It's $300. Period. It's $300 for the next 90 days. It includes all the trade alerts. It is not an introductory price. We're not a membership either. I'm going to throw that out there right now because people are like, okay, cool. I like this. Enroll for it. Great. I'll show you all your bonuses because we give you everything that TheoTrades has to offer from day one. But anyway, it's $300 for 90 days. And somebody always says, what do I do after 90 days? You decide what you want to do. It's not a membership. So after 90 days, if you want to do it again, it's another $300. Specifically, it's $297. Does that make you feel better? But it's $297 for 3 months. You know, and people look at this and go, how could it be so cheap? Because there's 6,000 people on the site. Okay. We built TheoTrade for scale. We built TheoTrade for trade alerts. We put on 8 full-time instructors here. Let me show you exactly what we do. Again, you can enroll right now at theotrade.com/skew. Know that there's a 90-day money-back guarantee on it, like period. If you come to me 88 days into it, okay, it's again, there's no questions. It's $297. We don't need $297 that bad. Like we will give you your money back, no stipulations, right? Bonuses. Let's actually talk about what is fully available inside of TheoTrade. For $297, this is what you get. We go beyond a class or one indicator. People want everything to trade, to invest. They want it at one place and they want it at one price. The first bonus that we're going to give you, we just added this, okay? We do courses about once a month, okay? The next course is coming. I apologize, I have Blake's name in here, okay? I apologize profusely, but this class is actually Corey Rosenblum. So I apologize profusely here as I was looking at the slide deck, slide 167. Anyway, this is actually Corey Rosenblum, which again, Blake Young is also, he's awesome. But this next class, okay, is brought to you by our instructor, Corey Rosenblum. See, it's fixed. There was never a problem. There was no problem. Okay, nothing to see here. Corey Rosenblum. It's live, January 27th, 9 to 12. It is going to be a 3-hour course that is forthcoming. Again, a 3-hour course that's forthcoming is going to be archived immediately if you cannot make it live. And I urge you to make some of the classes live because it's phenomenal. Like Corey is incredible. And that's why I'm totally apologetic that I put the wrong name in there, okay? The course itself will be available right after it, but we like to do the courses during the market, okay? The class, okay, brand new. I'm going to take you through everything in it. The class slide deck includes entry and exit criteria. The checklist is going to be available January 27th. It's called Mastering Intraday Range Class, okay? Corey Rosenblum is our resident swing trader. Okay, he's very different. Like, listen, I've talked to you today expressly about selling options premium. Corey is of a completely different ilk. We hire different, okay, traders in different genres of trade. By the way, everyone on our crew has a minimum of 15 years of professional experience. Either they worked as market makers, hedge fund managers, in the brokerage business, professional traders, prop trading firms. Okay, you're going to love Corey. Corey is one of our kind of senior instructors here at TheoTrade. Let me take you through what he's going to be doing, how to quickly identify within the first 30 minutes whether your trading day is likely to be one-sided, bi-directional, okay, move, or likely to be two-sided. What he's going to do is he's going to set up the entire trading day and teach you how to set up your trading day. Is it going to be one-sided to the upside, one-sided to the downside, or two-sided trade? How to create your own specific checklist. Okay, be ready at the opening bell. Range days are more common than trend days, how you can be prepared and eager to trade them, okay? When to trade aggressively and when to stand back and be safe, whether a trading day is shaping up to be a sloppy chop fest or to protect yourself, prevent from frustration and losses. What's the best trade strategies for range days? Okay, so chop back and forth. I'll give you different trading strategies. Okay, how to use key in market internals, okay, that set the stage for the range day. How to assess volatility and determine the safe conditions to trade in. What sector strength and weakness say about whether we're likely to have a trend day or a range day. How to identify price targets to play, okay, as a range day is developing in live in real time. And it's one of the reasons the class is going to be held during a live trading session. How to find intraday highs and lows and what we mean by trading high and low or low to high. Okay, how to read tick and spot divergences many traders miss. Okay, learn to do what is called a fade trade. All right, how to enter, manage, and exit it. Again, it's going to be phenomenal class. You guys are going to love what Corey Rosenblum is going to do. It's mastering intraday range day class. This is the curriculum for it. That's the first bonus. And again, we popped this in here. It's coming up January 27th. This is included. So when you come to TheoTrade and you sign up for the next 3 months, there's going to be more classes as we go. But I'm telling you right now, you want to get up and rolling and understand some of the nuances before the January 27th class. Now, the first bonus, the quick start beginner's guide, right? When you come into TheoTrade, we don't want you to feel lost. Okay. We don't want you to feel, overwhelmed. You go start here. This is for the absolute novice. Okay. So this is the first bonus, options 101, options 201. Okay. It's actually walking you through different nuances of learning some of the ropes. And we take you all the way into options 301. And this is actually preparing for your trading day, order execution. I urge you, even the most experienced traders in here, watch order execution part 1, 2, and 3. After 15 years in the brokerage business, I'll teach you everything in there about payment for order flow, how the trade is executed, how to get better executions. We have crash course and option geeks. All of this is just in getting you started, right? So this is the first little nuance, the quick start guide. Next, here's the next bonus, access to over 100 trading classes. Now, I just mentioned a moment ago, there's a brand new class that's coming. How do you think we do those classes? We've actually started in 2016, about a year after I left the brokerage world, we started TheoTrade, right? And we started TheoTrade, we just said, hey, let's just give everybody every class from day one. There's over 100 trading classes available. Guide to small account growth. Now, again, you're coming here to learn ultimate trades, but you're not limited to that. As I said, you could spend $30,000 in education, okay? And it would pale in comparison to what we provide here. Like here, you want to see some of the classes, guide to surviving in extreme volatility, back spread class, growing a small account, how to collect income being short, the risk twist spread class, all right, day trading NASDAQ futures, covered calls, pairs trading. I mean, if you want to see what the archive looks like, here, this is TheoTrade's, this is TheoTrade. Like this is the actual site, right? Cruise down over here. I'm one of the instructors, Jeff Bierman, Matt, okay? But my kind of genre of trade, I'm your in-house options geek, income accelerator, Ultima, okay? Tracking unusual activities, back spreads, controlling your risk, gamma irons, volatility crash course. How many courses are in here? You get access to every one of these, right? And every one of these courses, if you want to see how they look, you click in there in the income accelerator course, okay? The class, yeah, I just did this one very recently. Just did this class very, very recently, okay? And we kind of take you through this is the actual class, but here's the slide deck. You just click here to download it. This is what TheoTrade is. But that's not our only genre of trade. We're into technical analysis, swing trading, day trading, okay? We even have an in-house psychologist. Bonus number 3, we give you access to our chat room. Our chat room, we broadcast a minimum of 6 hours a day. We provide real-time trade ideas. And if you can't watch it live, number 1, it's recorded. Number 2, we text and push notification trade ideas. Okay. So again, I know some of you are like literally, because I can see off the side of my screen, some of you guys are already signing up for it, which is phenomenal. Again, it's theotrade.com/skew. Everything that I've brought to you thus far, okay, everything I've brought to you thus far, it's $297 for 3 months. And again, it's not an introductory price. It's not a membership. We do text and push notification. You have 5 trading portfolios. Okay. All of it is incorporated. One of the biggest things that we do here, and I'm going to show you, okay, what the chat room looks like, but one of the biggest things we do, we actually give you the ability to email us. And I put so much weight behind this specifically. You get to email us, okay, for $300 for the next 3 months. You realize if you emailed us one time, I was able to help you out, okay, of one unique situation. Do you think it's worth it? All right. You got to be the answer to that. And by the way, we do not shy away. Like people go, well, I can't answer trade related questions. Bring it. I've had every brokerage license pretty much available. Bring the questions. Most of my counterparts here that work at TheoTrade, we come from the brokerage business, the market making side of the business. okay, and or the hedge fund side of the business, we know how to answer your questions. You can bounce trade ideas off of us all day long. And I actually encourage it. So I know other firms don't do that, and other firms are scared to answer emails. Bring a trading question. Don't dare come at me and like, my sister's brother's dog has this question about a trade. Just bring it. Just show me the trade, copy and paste it in there. We want to see it. By the way, here's the instructors of TheoTrade: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. Jeff, by the way, okay, is also an adjunct professor at DePaul in Chicago. He's presently teaching a class this semester and moonlights with us. Jeff is also the former chief market technician for TD Ameritrade. He helped actually build the Thinkorswim charts. If you like the Thinkorswim charts, there is no one on this planet that knows more about Thinkorswim charts than Jeff Bierman, because he built them. He worked in my division. He built them. Matt Williamson, market neutral premium selling strategist. He's kind of like our resident in-house engineer geek. Corey Rosenblum, that's who's actually going to be hosting the next class. By the way, Corey Rosenblum is also CMT, as is Jeff Bierman has a CMT. Corey Rosenblum has over 20 years of experience in swing trading. Brandon Chapman. Brandon also worked at TD Ameritrade and Thinkorswim. He actually wrote the course manuals specifically, okay, for Thinkorswim and TD Ameritrade's education division. Steve Slim Miller, okay, by far has the most experience here. He's also kind of our resident in-house psychologist. Tony Rago. Tony's our intraday strategist. All he does all day is just calls out intraday trades. Last but definitely not least, Blake Young. Blake also comes from Thinkorswim TD Ameritrade world. He specializes in market profile, futures, currency products. He's a commodity trader and also managed portion of a hedge fund. So that's kind of our crew. This is us working from home. We give you access to all indicators and scans from day one. We use a number of proprietary indicators and scans that we built. We give you access to all of them. It's like another $1,000 of stuff. We just give it to you. Gravity points, expected move, okay? Theo Quant. By the way, I use this stuff every single day. Like every single day when I pull up a marketplace on the S&Ps, I mean, look, I use Quantix. What is Quantix? You'll learn. There's an entire class about what Quantix happens to be. I'm a very quantitative trader, and this is a quantitative tool. We give you access to that from day one. All right. There's no additional cost in there. It's still the same $300. Okay. And by the way, it doesn't go away after 90 days. Like you sign up for it, it's worth that just for the indicators. Bonus, like number 4, we give you the Theo Theta portfolio. This, okay, is the portfolio we started a year ago. Okay, it's Ultima premium selling. This is no holds barred approach. We show you everything: opening, closing, hedging positions. You're watching me trade like never before. Okay, everything. In addition to that portfolio, we also have what we call the Theo Theta small portfolio. So this is for bigger accounts, and then we have one for smaller accounts. If you're curious what the portfolio looks like, it couldn't be easier. These are the trades in the portfolio, right? When I say these are the trades, that's it. I'm opening, and then you can look at the closed trades as well. We also do text and push notification. In addition, I know that not everybody can tune in. Every Friday morning, I do a video. The video on Friday morning updates you. It's a 12-minute video that updates you on everything we do in the Theo Theta portfolios, both the large portfolio and the small portfolio, all packed into 12 minutes. So if you're not able to watch, and you listen, for $300 for 3 months, learn Ultima, get the trade alerts. That's enough. You don't have to tune into this, but I would. If I were you, I would actually watch some of the weekly videos because it explains every move. Bonus number 5, the technical analysis toolkit. For those of you that are market technicians, Tech 101, Tech 201, MACD indicators, timing-based systems. There are 21 other technical analysis class. Bonus number 6, we have a day trading treasure chest. Okay, intraday trading NASDAQ futures, day trading ES futures blueprint, consistent intraday strategies and setups, high probability intraday trading systems, 11 other day trading classes. Again, we have instructors for every genre of trade. Bonus number 7, timeout, write this one down. The 5 essential building blocks to successful trading. This is a class, every single one of you. I put it in there as a specific bonus because literally anybody involved in this business should watch this class. Okay, Steve Miller put it together. It is phenomenal. We could sell the class for $2,000, okay, all day long. We incorporated it simply because we just felt like every single trader that ever went through, okay, anything at TheoTrade, we want you to understand it gives you insight to risk like you've never seen. It's going to change the entire way, especially those of you that are experienced. It'll change the way literally that you look at this entire business. Okay. I put so much stress on that. I always say, write this down because you'll forget. And there's over 120 classes in our archive. All right. It's called the 5 Essential Building Blocks to Successful Trading. Serious, write it down. Number 8, it's a quick start guide to Ultima. Ultima, you go through the class, right? And you have all this criteria, but we also built like, you open up a new piece of technology and we built like a quick start guide. So you could just open up this like PDF file and in a couple of seconds, you could be like, boom, I can execute this. All right. What our members are saying. This is from Jeremiah. My first 4 trades following exactly the details of your Ultima class. Just closed out using GTC orders, set right after getting into the trade. It's paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. By the way, he's actually also talking about, and the reason I threw this in here, okay, following exactly the details. The details are simply, these are trade alerts, okay? TheoTrade includes everything you need to trade or invest. We give you classes. We give you coaching. There's continuing education here, continuing to do more classes, email access to the instructors, live trading room, indicators and scans, mobile access, everything you're going to need to succeed. We literally have built like the Netflix for traders. I mean, TheoTrade is the Netflix for traders. There's something for everybody. It's different genres of trade. It's $297 for 3 months. Okay. And this is like kind of a one-time thing. It includes a brand new class, Mastering Intraday Range Day class with Corey Rosenblum is now included in this. Go to theotrade.com/skew. I want to reiterate, okay, there's a 90-day money-back guarantee on everything I've discussed here, okay? If you're not satisfied in the next 90 days, email support@theotrade.com, receive a full refund. It's only $297, but receive a full refund, okay? There's, again, there are no stipulations to that money-back guarantee. I think that that's imperative that we understand that. There's no excuses, no questions, there's no commentary. You can just literally email us and say, I need a refund. Okay. Again, there's, almost 1,000 people that are logged onto this thing. And with that 1,000 people, like we know, okay, pretty good number are going to enroll for it. Might not be for everybody, but I'm telling you what, if you're willing to put forth a little bit of effort, a little bit of time, you are going to be amazed at what is actually not just Ultima, but what is inside of TheoTrade. You will never find at any cost a group of instructors, okay, as knowledgeable as and in depth of what we've actually built here at TheoTrade. And I put our money where our mouth is and I say, if you find something that's, first of all, tell us. Okay. Secondly, you can get your money back at any point. And I think it's really important in the next 90 days. By the way, if you receive a refund, you get to keep bonus number 1, which is the bonus number 1 is what? It's the start guide. It's basically, it's you learning options 101, 201. Okay. Get into TheoTrade now. We give 30 riskless spots. And we do that specifically to incentivize you. And I tell that to people right up front. Okay. The first 30 individuals to enroll today, okay, have a completely riskless trade, meaning that only 30 spots do we give the money back guarantee. And we do that again to incentivize. We have a lot of people tuned in today. We want everybody to sign up for it for sure. But you have to realize we provide unlimited email mentoring. We have 6,000 clients. We've actually added a number, okay, of highly in-depth instructors and support staff here just recently, keep up some of the emails and so forth, instructors, okay, and traders that worked with us back at Thinkorswim and TD Ameritrade. But again, unlimited email mentoring for $297. And again, you get to send us your trades. It's why we're giving you 30 spots in there. So the first 30 people to sign up. I'll be more than happy to read off the names of the individuals as you are enrolling here. The $297 riskless offer, it's never been available before with Ultima trades. And we give you the Theo Theta portfolio, okay? And Corey Rosenblum's new class, which is Mastering Intraday Range class, which is coming up over here. And again, there's no stipulations to the money back guarantee. I do want to throw this up here one more time. It's theotrade.com/skew. In fact, I want to reiterate again, when you come over to the site, it says 30 riskless spots left in here. simply click add to cart. We also mentioned the class that's forthcoming. That's the Mastering Intraday Range class with Corey Rosenblum, who's a CMT. It's live on Thursday, January 27th. That's just included in everything else that we should give you. Okay. As you click in here and go add to cart, I want to reiterate your billing information. By the way, you could do 297, 2 payments of 149, or 3 payments of $100. I just threw that out there, but be sure to put your phone number in here because it automatically enrolls you for text messaging. If you do not have access to text messaging, not everybody does, but if you do not have access to text messaging, right here on your mobile device, you can download TheoTrade Mobile. Okay. And again, I'll reiterate, you can download TheoTrade Mobile. And the reason that I bring up TheoTrade Mobile, okay, and you can actually kind of see TheoTrade Mobile in here, is it authenticating to, it authenticates. TheoTrade Mobile allows you to not only see push notifications of trades that I'm doing, and it doesn't cost you any additional to use TheoTrade Mobile. It's just included, okay? But it allows you to download the archives, okay? So you can actually, you can play these classes anytime you want on your mobile device or even offline. Anyway, fill out your information there. Again, it's theotrade.com/skew. By the way, if you're interested in what TheoTrade looks like, I saw somebody just pop that question in. This is TheoTrade. So this is actually where you're watching my screen or our screens. And down below over here, this is our client. And they get to chat with one another. You'll see some highlighted. Okay. In fact, this is one of our instructors, Tony Rago. Brian Aponte works with us. Kind of scroll down, you can actually see everybody kind of calling out trades in here. If you want to see it live, okay, right now is none other than Tony Rago. He's actually trading NASDAQ futures here. Okay. And you can kind of see Tony with a dome. This is intraday trading. That's not for everybody. And I reiterate, that's not for everybody. But you can kind of see live he's trading. I muted him so that you don't have to hear his voice over mine. That's what TheoTrade. We do this all throughout the course of the day. Again, it's theotrade.com/skew. All right. The money back guarantee. Any questions on there? By the way, this is not a membership. After, again, I want to reiterate, after 3 months, if you want to do it again, you do it again. By the way, one of our members is saying, John, close my year-to-date profit from Ultimate Trades has already paid for my yearly TheoTrade subscription. Okay, this is everything you get. Ultima, the beginner's start guide, 100 different trading classes. This is access to our chat rooms, which I just showed you a moment ago, and email access. This is the Theo Theta Live portfolio where we're sending you trade alerts. Okay, we give you the technical analysis toolkit, the day trading treasure chest, the mindset mastery, and the quick start guide to Ultima. Okay, it's theotrade.com/skew. By the way, if you follow that link, the auto expected move indicator is found on that particular link right towards the bottom of the screen. Is your auto expected move indicator. For those of you, as you're enrolling right now, I'm going to answer some questions, but as you are enrolling, you need not download that indicator. Those that are enrolled for TheoTrade will be given access to every indicator that we use, every scan that we use, okay? Anything that is proprietary to TheoTrade, we provide to you literally from day one. Okay, so again, I know that there's some people with some questions. I'm going to get some generalized questions first, and then I'm going to hit individual questions. But I want to reiterate here that you can email us anytime. And again, I wanted to drop a quick email. I think the class is wonderful. I've been stretched each session, but not beyond my capability. After each session, I watch the recording and do the homework. I feel each week that my knowledge of options trading is growing steadily and rapidly. Obviously, I can't speak for my classmates, but it's going well for me. Here's one other one from Todd Summerall, and I love this one because basically it says, if you don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. The reason I'm throwing this email up here is I want you to know that you can email us with very specific trade related questions, right? And that alone is worth the $300. And this is an individual where we saved his entire life savings. We looked at his portfolio. It was actually me specifically, looked at his portfolio, go smash the portfolio or it's over for you. Like there's no chance that you're going to survive even the smallest downdraft. For your information, before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. And I take that one pretty seriously because when somebody comes to me with hundreds of thousands of dollars, that they don't see the risk. Okay, this is very recent. you got to understand that we'll help you. I mean, we'll see that risk in there, bar none. A couple of questions we're going to answer, then we're going to get into some specific questions. So bear with me here. All right, let's get down to it. By the way, I can see your questions right here on my device too. So bear with me here. All right. People always ask us what we need to get started, and you need a laptop and an internet connection. Okay. We have everything you're going to need from absolute novice to the extreme. It's something that comes up though constantly when we get newer people in here, right? What I mean by that is, like, technically right now, you don't even need a laptop. Okay. I argue I trade a tremendous amount on an iPad. Now I'm going to show everybody too. I don't use like the iPad Pro. Okay. I don't care. This iPad is, it feels very professional to me. It's also a $300 iPad, but like, I don't feel the need to buy expensive computers and so forth. I have a bunch of monitors, but that's because I'm a geek and I do sit here throughout the course of most trading sessions, and monitors are like $100 a piece these days. So everything's become relatively inexpensive. Anyway, I want you to know that right off the bat. We'll give you everything you're going to need to know from novice to expert. Bear with me here, okay, as we're actually coming through here. All right, make sure we're all good to go. Excellent. Next question in here. I'm just looking for it. Next question. This is not a membership. We're not going to auto renew or bill you again. That's really, really critical. And I want to bring this into perspective for a second as well. As you take a look over here, okay, it's $297. Okay, what does it cost? $297. If you want to do it again, we ask you. After that, it's $297. Okay, period. No if, and, or, but about it. Okay, just trying to hit all the major questions that are in here. Okay, hang with me here. All right, next one on here. We're now providing Theo Theta weekly video updates. So you can follow all the moves we make. When I say the Theo Theta weekly video updates, ultimately what that basically is 12-minute video that we put together on a Friday. I do all those Theo Theta updates because it's my portfolio. And what that basically does is it takes you kind of through any trade or alterations I've done to the portfolio or lack thereof throughout the course of the entire week. So each and every Friday, we give you a quick update on what we're doing, okay, what my intentions are, why I've traded, why I have not traded. All right, with that, okay, onward and upward over here. All right, just making sure we're good. A number of questions. Excellent. We've got a bunch of the questions in here. Okay. All right. Next up over here. By the way, there was another question about the membership. It's not a membership. We don't auto renew or bill. We don't like that whole gym membership thing, so we figured you don't like it either. Okay. Number 4 over here. We archive everything. We understand not everybody can watch every live trading session. So we archive everything. The cool thing is you can actually download TheoTrade Mobile. This is number 5. And you can actually watch the archives at any point. We have every word spoken on TheoTrade archived since 2016, and it's all searchable. Okay, you can look at anything. And what's really neat is on the mobile device, you can even speed it up. You can watch it at like 2 times the speed. We sound like chipmunks, but it doesn't matter. It saves time. Instead of watching an hour presentation, watch an hour presentation in 30 minutes. It's awesome. We're going to provide you access to TheoTrade Mobile. Again, that's part of it. You can view those archives at your leisure. Add your cell phone number when you're enrolling. And that's important. Add the cell phone number when you're enrolling, okay? Because we can do text messaging, but if you're out of the United States, we'll do push notifications, not a problem. Again, it's theotrade.com/skew. Number 7, you can email us anytime, okay? We will get you back to you within 24 hours. We throw that out there as a disclaimer. Most of the time when you email us, we're back to you within a few minutes. So we have an entire email team. But the reason I put 24 hours in there is I want you guys to know I trade, okay? All of the instructors here trade. I like to answer emails right after the market closes, okay? So any trade related questions, okay? But don't email me on a Friday afternoon with 10 minutes to go to the close and be like, help me. Okay. You got to get a little bit ahead of it, but email us. That's what we're here for. Number 8, you're going to gain access to everything we've done. Everything we've done. It's actually in the previous 6 years, classes, coaching, sessions, everything. It's all searchable. You name a topic and it's here at TheoTrade. Any trading topic, it's here at TheoTrade. I'm serious. Okay, come up with some really curveball stuff. It's here. Variations of all the trades that I've shown today can be done inside of an IRA retirement account. You can have as little as $2,000 in a margin account and be able to do ultimate trades. Okay. The other aspect, we will help you get approved for options. Some people say, hey, this brokerage firm doesn't allow me to do this. Okay, we will walk you through how to get approved to do anything you want at your brokerage account. Remember, there are 30 riskless spots. Get results, take action, enroll for TheoTrade now. By the way, some generalized questions, and I want to make sure that I read off a couple of names. By the way, on the riskless deal, it takes me, there are 30 spots available on our riskless trade deal here. Again, there's 30 spots available. I'm going to answer a couple of the specific questions, but I want you guys to know as you're enrolling, it takes me approximately 7 minutes or so before I see your enrollment. Here's the first batch of names: John S. from Texas, David D. from Kansas, Dick H. from Maryland, Thomas from Florida, David J. from Florida, Anthony from California, John S. from Texas, Vernon B. from South Carolina, Michael T. from Virginia. Okay, so it takes me, again, a few minutes. So there's a lot more people I can see that are enrolling that I will try to read off your name. But on the 30 riskless spots, I've just read off only about 10 names or so. Okay, there's at least 15 other that are currently presently enrolling right now. I'll read off those names here momentarily. Again, it's theotrade.com/skew. By the way, let's come to some specifics. Do I sell index options? Absolutely. Index or ETF, that's fine, but it's not limited to just index and ETF. So you'll see that I'll do some bonds. You can even actually move this into the commodity markets if you so choose. Just has to fit the right construct of volatility. Okay. Okay. Well, can you handle a portfolio if I invest $5,000 to $6,000? Listen, all trades have to be executed specifically by you. But sure, I mean, a $5,000 or $6,000 portfolio, okay, by all means, you can execute any of the trades that we've discussed today. All right, Timothy actually said the hedges scare me. Okay, I don't know what to do with them, when to close them. So we actually walk through what to do with the hedges. You know, the irony of most of the hedges, most of the time, you don't need to do anything. Like most of these positions, like 95 to 97% of the time, okay, it's like literally like flying an aircraft. You know, you do much of nothing, and then again, a couple of bumps in the road, you're like, ah, okay. You don't do anything with the hedges until the hedges start to explode in value. And if the hedges are exploding in value, it's because the portfolio, all right, is starting to take on a little bit of water. Those hedges are there for only the most extreme of environments. Okay. Should the hedges scare you? Yeah, because you so infrequently use a hedge. We'll walk you through that. Okay. All right. I usually close winners too soon and let losers run. That will not happen here. Okay. We give you execution exactly of when you should close a winner and exactly when you should close the loser. And you have to actually, you know, saddle up and follow those definitive guidelines. Okay. All right. Somebody said I'm scared of losing money. Okay. Like I did in prior crashes. Will Ultima help prevent me from losing money? Absolutely. That's what it's designed to do. That's what the hedges are there for. Okay. By the way, can you explain why there's larger theta decay out of the money? Okay. First of all, gamma in those out of the money options is basically negligible. What you're seeing in the theta decay isn't actually just theta. It's actually volatility. Okay, it has to do with skew. The skew is even bigger in the back month options. So volatility is actually coming off a little bit. And the volatility coming off with just a minuscule amount of theta decay is enough to actually produce between 50 and 60% profits in 1 month in back month options. That's what Ultima means. I mean, Ultima, okay, it's the volatility. And that's really what the entire course is actually based on over here. By the way, somebody said, Since one cannot sell naked options in an IRA, is this program going to work? Actually, technically, you can sell options naked in an IRA. Most people are not familiar with that, but you absolutely unequivocally can sell options naked in your IRA. All right, I think I got most of the questions answered in here. And again, I want to make sure each and every one of you, I know that there's a ton of people enrolling right now. I don't want to keep you hooked on longer than you have to be for me just to read off names. Okay, with that, and again, I'm actually reading the names right now as they come in here. But again, I don't want to leave you hanging on here any longer. If there's any specific questions, I will get them on a one-to-one basis over here in Zoom and specifically here in terms of YouTube. I want to thank everybody for tuning in. Again, it's theotrade.com/skew. If you have any questions, again, you can also email us, support@theotrade.com. You can even hop in after enrolling today. Hop in. We're in there for the next literally 2 hours. We actually have a chat even going after the market closed today. So by all means, enroll now. Hop into the chat room. Tell everybody you're new. You got a newbie coming in, right? And we'll work with you guys. Thanks, everybody. And again, don't forget this 90-day money-back guarantee on there, theotrade.com/skew. Have a wonderful afternoon. Bye-bye.